Welcome everyone, how's it going? Alrighty, welcome to Tesla Power Hour / quarter 3 earnings report. Let me know if my audio is coming in clear on the chat. I see everyone in here. Great American, Magnus, Greg, Vinoy, Steven, Raptor, Marco, how's it going? Think Real. Connor now, awesome. Okay, I think everything's going good. Tyler's here. Okay, loud and clear. Awesome, perfect. Appreciate it. Tesla sitting at 866.24. I've got a long live stream. I've got a long live stream planned out today. It's going to be a marathon stream. So we're going to do power hour for the next hour. So 12 to 1 p.m., the last hour of trading, that is. And from there, okay, someone said my volume's dookie. Hopefully my volume's fine. I've checked everything. It should be okay. And then earnings report should come out shortly after market close. So we're going to go over that. And then from 2:30 Pacific, so about an hour and a half after market close, Tesla earnings call will be going live. And then we'll be going through that. I won't be talking during the earnings call. Don't worry, like we usually do. If you're new here, you have no idea. During the earnings call, I just shut up usually. I'm usually on video, and then we just play the earnings call and just chat. So we'll do that. So it should be a long, Tesla volume. Gotcha. So it should be a fun live stream. Okay, perfect. Thanks, y'all. Appreciate it. Let me know where you guys are tuning in from. About 150 people in here so far. Let's get the party started. Let me know in the chat. Hit the like, by the way. It helps support the stream so we can get more folks in here. But let me know in the chat where you guys are tuning in from. As we sit here at 866 essentially on Tesla, volume for the day is about 9.5 million. And to be honest, I was thinking about volume today, and some people were asking questions on Discord in our Juju Gang community, which, by the way, if you want to join, shout out is, hey, the Brewster, thanks for the super chat. $4.99. Appreciate that. Let's get the party started. Thanks to Booster. And we were having a conversation about volume tomorrow, and it'll be interesting to see what volume is going to be. To be honest, I'm not bullish on a large amount of volume tomorrow. Usually post earnings day, it's actually a lot. I've usually been surprised on the downside for volume post earnings, but let's see. Florida, Las Vegas. Faisal, welcome, by the way, to the Juju Gang. New member right there. Florida, Las Vegas, UK, Malapatas, California, Austin. Hey, not financial advice. How's it going? Chicago, Tennessee, LA, Orange County, Washington, Vancouver, Washington. Nice. Sunny, Mexico. There we go. Los Angeles. There we go. We got people all over the place here. Let's see here. Griffin says he's bodying people on Twitter for me. What happened on Twitter now? What did I do? North Carolina, Australia, 6 a.m. says Paul. Wow, geez. Netherlands. Hey, Alex, how's it going? San Clarita, California. Can't talk. It's already the first couple minutes of the stream. It's going to be a long stream. I wore the Juju sweater. I wore the Hit That Bid sweater. And got the Juju on the back. I won't show it now. Connor's saying the IV percentile into earnings sucks. It's very confusing. It is. The IV percentile, I posted a screenshot in our Discord here. Try to see if I can pull this up. The IV percentile is very low on Tesla. It's and this is a screenshot from this morning. Let me see if I can try to pull this in here. Discord. Let's see if I can pull this in. This is the screenshot I posted in. IV rank for Tesla this morning when I posted this screenshot was on the 52-week was 1, 52-week IV percentile 0, 26-week was 2, 13-week was 4. And mind you, obviously these change by the minute, and these change depending on what way the wind gets blown for sure. But it's very low relatively speaking, right? Oh, gotcha. Thanks, Griffin. Yeah, so we got some news yesterday. Do I have my crate of Juju? I've got the crate all right. Yes, so I've got about 2. I don't even know what kind of oranges these are. I just cut them up, to be honest. They're usually I go with the tangerine type, or I go with like the mandarin, like the easy peel type stuff. Just fair warning right now, it's going to get a little bit gross because as soon as I start sucking these oranges up, okay, that sounds wrong. As soon as I start gobbling these that sounds even worse. As soon as I start eating these oranges on stream, it's gonna it's gonna get interesting. Let's just put it that way. And to be honest, I'm kind of saving these for the earnings call. Every time Elon says something predictable, or I guess in this case, Zach Kirkhorn says something predictable, like, Tesla's an order of magnitude or something, or, the best battery is no battery, I'm going to eat one of these slices. So someone should invent like a bingo Tesla earnings call cheat sheet. Has that been done before? You guys are hilarious. I have no problem making fun of myself. All right. Don't eat the juju. I want to buy more shares before the next rally. How's it going, Casimir? Okay, so let me just get my computer all together. We just missed it, folks, by the way. Craig Irwin was on CNBC. Craig Irwin was just on CNBC. He was asked about full self-driving and the issues about NHTSA on, if you guys don't know, essentially one of the senior advisors being appointed by Biden into NHTSA is going to be Missy Cummings. And she is a known anti-Tesla person. She's been on podcast hating on Elon. She doesn't like full self-driving. She hates Tesla vehicles. I think that's an understatement. And so, and kind of the rage yesterday, and I even saw Rob Maurer going off on Twitter yesterday, which you got to respect because Rob is very professional. JPR created a bingo sheet. Okay, I'm gonna have to pull that up. And to be honest, so basically there was an uproar last night. I'm not sure to see if I can pull this up here. There was an uproar last night around it, and yes, so let me just pull this up here. I've got James Stevenson. So we're going to go through his 69 tweet Twitter thread around EPS. We're going to go through that. But for a second, I'm just going to pull up Rob Maurer's tweet here. He posted. This is his Patreon. Ooh, did he delete it? Oh, no, here it is. He pinned it. Sorry. Our government has chosen to employ a person who uses a Twitter block list, which was curated with the sole intention of suppressing debate and facilitating the spread of misinformation without opposition. This is not okay. Tagging Elon. So I'm actually not blocked by her. So I can pull through tweets. I need to do more DD. I know there's an interview that she did recently. Man, the Twitter ads that you guys just whack nowadays. And there's some flows to look at. Let's take a look here. And, I'm going to have to do some more DD on to seeing her interview. I have a hard time. And maybe I'll have a video out on it. We'll see. DJ says, can we make a bingo card for what people in the chat say too? I mean, guess most of us will be squares and will say, will it drop after earnings? Yeah, but see, this is the problem though, DJ. If you do that, then everyone's just going to rig the system for the bingo, right? EPS under $2. We're right. Hey, Amit, thanks for the super chat. Appreciate that. 400 Indian rupees. Appreciate that. Let me just try to make my face a little bit more. Okay. There we go. Folks, it's going to be a fun time. It's going to be a fun time. Hit the like if you're going to try to stay till the end, but I know you guys are probably working and stuff, but I'm considering this kind of our Juju Gang live party. Good vibes. Grab a drink if you want. You guys know I got the Juju on deck. And just enjoy. So let's pull up stock price here. So stock price is pretty tame, honestly, on the day. And to be honest, I'm not sure how you guys feel about it. Self-employed, I'll be here. Awesome. Bin and Raptor. Appreciate that. Okay, honestly, I'm quite stoked on the daily with Tesla. Yes, I mean, should we have, could we have had a 7th and 8th green day in a row? And to be honest, we might actually finish green on the day today. I think consolidating here, and remember, we have a gap to fill down here potentially between 843 and 851. I think for the long run is healthy. Let me know what your guys' thoughts are on earnings. Let me know in the chat. Do you guys think we are flat tomorrow, down or up? Okay. My estimation, my guess right now, my going theory, and I've sold some really far out the money calls a couple of weeks away against my 950 leap, specifically in this case on my account. And it's like 1,020. It's November 12th or something. And, you don't get that much premium for it. And I'm not sure if I'm going to close this before market close or not. But, you're only getting like $2.30 per contract that you sell. Premium is is it worth it? And Gary, and I posted a video last night of Gary Black going through his Excel spreadsheet as he normally does and showing that for the vast majority of recent earnings, Tesla does not move up post earnings. You guys are saying down, down. Early likes equals good juju. Thank you, Tyler. Yes, it does. Someone says record earnings stock crashes tomorrow. This is the way. Someone says up. Yeah, so down, up and down tomorrow, says FHA. Hey, I can promise one thing. The stock will either be up or it'll be down. Or it might be flat. But one of those three things has to be true. You guys know there's no financial advice on this channel. We're just here to have fun. I'm hoping for the 3-day rule, says Martin. So yes, we talked about the 3-day rule. Great point, Martin. Is last quarter, Tesla came out with record GAAP profit, right? I think they hit $1 billion in gross profit, a GAAP profit ex ZEV credit for the first time in history. And yet Tesla sold off for a couple of days after, or was flat, or was very minimal before the market actually started to decide that, hey, we're going to price some of this stuff in. So that being said, there might be the 3-day rule here for sure. Up. So Ape says up, FOMO coming. Yep. I mean, maybe. I'm really stoked, right? I'm cautiously optimistic is what I said in the video yesterday. Daniel says you need to ship a case of Halo oranges to that guy you interviewed a few days ago. Yes. Bradford Ferguson was awesome. If you guys haven't watched his video, he's a former options market maker, now financial advisor. He had so many Halos on stream that Tesla literally rallied to 870 single-handedly. Okay, Howard brings up a good point. Everyone is expecting a drop, so it should go up. It's almost like that. It's almost like that. You know, earnings is at 2:30 Pacific. Thank you, Paco. Appreciate that. Okay. Great American says, hopefully this, quote, Tesla will tank with great earnings talk is not a dumb self-fulfilling prophecy. Here's what I think about, and I don't think it'll tank. But if we talk about it from an options perspective, and you guys know that we trade a lot of options, let's say on this channel where we're interested in looking at the options market for Tesla. When you look at the options market and you're trying to go long a call, you're buying premium ahead of earnings. So should a drastic move not be priced in, your far out the money calls or puts are all premium, obviously. And so depending on what happens, you probably are going to see a massive cratering of premium of extrinsic value on what side you are, whatever side you are, right? That's what we're talking about. So when you talk about sell the news, it's not that Tesla is going to go down 5% tomorrow, right? Who knows? But the point is, even if Tesla goes flat tomorrow, if you own calls going in and Tesla's flat tomorrow and you own short-term calls, those are getting cratered, right? That guy Ty says Ivy Crush for sure. And this is the problem. It's like it's like there's not even that much premium, relatively speaking, priced into this thing. You know, when we look at the options market, pull up Webull here. By the way, I'll quick plug, get your 2 free stocks with Webull. Affiliate link is in the description. I think you have to deposit a minimum amount and then you should get your 2 free stocks. And let me know when you do get those 2 free stocks, which stocks you end up getting. Okay, but the options market, you look at premium. Okay, let's stick with this week's option chain. If we go to 900, the 900 out of the money calls, those are priced in at $5. 900 is about a $35 move up. About $5. $35 on the downside gets us to $830 on the put side. An $830 put is priced in at $5. So you look at this and you go, okay, for the first time in a while, we're actually priced in pretty equally, call to put, albeit it's on earnings week. So you can go, okay, well, obviously there's some buying coming into this. But when you come into something like, let's say if you go into November's option expiration, the monthly, right? November 19th, 2021. And you do the same thing. You go, let's say, in this case, let's go 900 again. The 900 strike out of the money call for November 19th is $20, so about $2,000. And the 830 put out the money is $2,000 again. Wow, so pricing has actually evened out quite a bit on the call side as well. Interesting. It's because I was only looking at the call side for the longest time, so I never paid attention. But it looks like either the puts have cratered in value, I guess a lot of people are probably selling puts. Or the calls have just gone up, but I don't think the calls have gone up that much. I don't know. You guys tell me this. 30 days to expiration, 1,000 strike call for Tesla is $4. Is that fair value in your eyes? You're paying $400 for the option to buy 100 shares of Tesla at $1,000 in 30 days when Tesla's at $865 today. Yes, we have earnings baked in. So if tomorrow we're flat, these are probably at $1 really quick, $1 or $2. I don't know if that's fair value. Great American, it's all about leverage, right? When you buy options or you buy calls and puts, theoretically you can, in theory, control up to 100 shares with only buying a contract. And it's the leverage really that the options market attracts for a lot of people. Thank you, Benrad. Joshua says a bit expensive. I'd buy 1,000. Joshua says I'd buy 1,000 calls 1 month out for maybe $3. 1,000 strike calls. Yeah, it's a. Okay. Well, yeah. So Vasu says day after tomorrow, probably the best day to buy calls. Ivy would have crushed everyone. Exactly. And I'm talking about the other side, right? Selling premium. If we talk about selling premium for a second. So, I mean, I don't know what to think. I'd imagine this. If Tesla does go up tomorrow substantially, I still think 900 would be a substantial resistance point for Tesla. 940 to be exact, which is our previous all-time highs. I'm trying to look at the earnings. If you look at, I'll zoom in here. Here's an earnings week right over here where my cursor is. You can see post-earnings, Tesla has sold off. And that was different, right? That was April and there was supply chain issues and all this sort of stuff. January 26th as well, 27th, Tesla sold off, gap down. And not massively, mind you, and Gary Back has this all in an Excel spreadsheet. Here's another earnings week baked in right over where my mouse is. So you do Tesla's down again, or if not flat. The earnings call here, so September of last year, doesn't look too hot as well, but this was because of S&P inclusion, right? So context does matter here, absolutely. I'm trying to find the last earnings call for Tesla. Last earnings call for Tesla were removed the following weeks after. Here's one. Okay. I can kind of dig this one. So this is January of 2020. Let me just make my Weeble a little bit larger here so you guys can see. January of 2020, January 29th to be exact, was our quarter 4 earnings report. This was with Shanghai for the first time. And that earnings week, that post-earnings week, Tesla rallied from this is post-split, $115 all the way to $193. Obviously, different context of a company back then in terms of market cap, in terms of movability, all that stuff. But that was the last earnings call where we substantially ramped up quite a bit. Like this is almost like a 50% move within a week or two post that earnings, and that was Shanghai. And I guess you could make the argument that hey, that was Shanghai, and this is Berlin and Austin. Although they're not live yet, whereas Shanghai was, right? Welcome, Brian. Bloomberg's talking about Tesla. Okay. I've got CNBC ready here. I'm going to try to see if I can have Bloomberg right at the ready as well. Appreciate that. Raptor says thoughts on Rob versus James's earnings per share being so different. Yeah, so we could talk about that. Let me just pull this up. So Rob Maurer is at $1.69 non-GAAP earnings per share, whereas where is it? Whereas James Stevenson, who's awesome on Tesla Twitter, go follow him. He's at, and I'll zoom in here. He's at $1.55. So about 20 cents worth of a difference. I'm guessing, and I have to go through the numbers individually. I'm guessing something to do with energy is probably the difference. Let me just pull anything interesting here to look at. So, okay, this chart I quite like. This is the trailing 12-month gross profit for Tesla. From last earnings, is this updated yet? So last earnings was quarter two. Trailing 12-month gross profit for Tesla is nearing $10 billion. He expects it after this earnings report to have Tesla up and over $10 billion gross profit. The trailing 12-month adjusted EBITDA is, as of last quarter, was approaching 9. And let's see here. There's one chart that I want to show y'all. So look at this. This is the Tesla quarterly ZEV credit revenue. And you can see it's been falling since essentially... Oh, sorry. I'm looking at this wrong. Interesting. Hold on. Tesla regulatory credits revenue. See, he's not... So he's saying, and we know this, Tesla's regulatory revenue last year was $300 something million. He's expecting a bump up this quarter and a continual bump up. Interesting. So did anyone... Okay, and someone fill me in. Did Tesla re-up with their whole deal with Fiat? With the ZEV credits? I thought the going narrative was that the ZEV credits were going to die very soon. Adam says, James predicts auto gross margins to go down, but also includes one-off costs for Model X. Okay. Rob's over $2. Oh, sorry. Rob's over 2. What's Rob at? Rob is at... Was he like 210? Oh, so $1.69 must have been his gap. Gotcha. 215. Okay. 210 or something. Okay. So yeah, that's quite the big gap, hey? Clement says gap is useless. Yes. I mean, for the most part, I agree, right? You talk about gap. I thought we made the promise as Tesla bulls after Tesla had 4 consecutive gap profit quarters that we weren't really going to talk about gap anymore. So yeah, for all intents and purposes, when we talk about non-gap, that's really the one that we want to look at. Oh, Josh was saying that he thought there was $0 impairment. Impairment on Bitcoin? Was there another Bitcoin expense this quarter? Surely there can't be. By the way, look how beautiful this graph is. This is Tesla's quarterly revenue. We know last quarter, the revenue, Q2 2021, is $12 billion. And James is projecting this quarter for it to be about 14 point something billion. And then for quarter 4 of this year, over $16 billion. Just crazy. Alex says he was at $2.50 pre-impairment. Okay. I missed his video yesterday, and I'm guessing that's where he probably cleared it all up. Michael says, analyst consensus is something like $1.70. Whisper must be higher. Need a high of $1.90 or low 2 for a big beat. Here's the thing. We can get a big beat, right? We can get a big beat. The question is, how does this... And someone saying Gary Black's projecting 5 cents a share on Bitcoin impairment. I didn't know Bitcoin came lower this quarter, but than it did last quarter. Let's pull up Gary, though. But here's the thing. I mean, at the end of the day, the question is, will the 3-day rule come into effect again? By the way, did you guys see this tweet from Elon? I'll read it out if you're audio right now. Elon tweeted to Winton Arc, Brent Winton, who tweeted, Robo-taxi could turn out to be the most meaningful economic productivity delivering innovation of all time by multiples. And if and as it scales, the technology unlocks massive capital utilization and labor efficiency improvements, it could truly be an innovation without a precedent. And it goes to show the annual GDP productivity impact with robo-taxis. Elon replied to that, which I said he minced no words with this tweet. He said, the day full self-driving goes to wide release, it will be one of the biggest asset value increases in history. The day full self-driving goes into wide release, it will be one of the biggest asset value increases in history. Obviously, that got me giddy thinking about it. So the key here, he says, wide release. Let me know in the comments when you think wide releases. We know that beta is expanding. We know that this Friday, beta is going out to, is it 98 scores now? So, there's that. Wide release, meaning pretty much probably anyone that has full self-driving will be able to get into beta. 99 on Friday. Gotcha. 2025, wide release goes 2023, 3 years. So you guys know, if you guys remember, I made videos on full self-driving subscription and my thoughts on robo-taxis. And always what I preface robo-taxis with is, even if I think Tesla can solve for it, the biggest hurdle I see for full self-driving has been and always will be bureaucracy. And we're seeing it unfold now. Trust me, I live in Vancouver. We just got Uber like 14, 16 months ago or something stupid. Like we just got Uber and Lyft ride sharing like less than 2 years ago, I want to say. And that was because of the taxi cab lobbying and the unions that go on here. And that's Canada. You know, you talk about the taxi cab industry, the driving, I don't know, logistics unions out, logistic unions out there, supply chain unions out there. I don't even know, a million different people against this. This will be one of the hardest rocks to push up the hill. But as Elon says, the day that it happens and it goes wide release, it will be the biggest asset value increases in history. Daniel says Elon's comment is not about wide release beta. He means wide release with regulatory approval. Yeah, I figure as much. Yeah. Martin says, "Hey, I should be on numbers. What do you want to hear on the conference call tonight?" I'd love to hear, and I'd love to hear your thoughts as well on what you guys want to hear from the conference call. But for me, I'd love to hear anything about Austin related to estimated opening. Obviously, Berlin is expected to come online very shortly. You know, anything on that, as in like, hey, we expect and we anticipate Berlin to be online in 2 weeks or 1 week or a month, or by this date we should have a decision. Anything like that. You guys are saying Company X. That would be hilarious. What else? Cybertruck. I'd love to hear about Cybertruck. I'm a bit disappointed that Cybertruck likely is not going to come out till the end of next year. What else? 4680 battery cells for sure. But the thing is, Charlie, with 4680s is the question is if Elon's not on the call, do we get a lot of that? Maybe we get it. Maybe we get it from Drew Baglino if he's on the call. I forget, was he on the call last quarter? I think he was, but I'm not sure if I heard him much. And then obviously stuff like gross margin ex ZEV credit is something related, and PE ratio, right? Let's see how the PE ratio turns out to be for Tesla. Right now, the PE for Tesla is 451. Hey T-Mac, how's it going? Kelsey wants to hear about Giga Mars. Yeah, I mean, Kirkhorn is going to definitely own the call, bring his own agenda, I think. But someone said in our Discord group, RS, Elon's jet. What's the Twitter handle for Elon's jet? Let me try to find it here. Where's that creepy jet Twitter? Elon jet. Someone know? Oh, there it is. It's at Elon jet, if anyone's curious. This is kind of creepy, but it follows him around. And it essentially tracks where he's going. And it looks like he landed in Austin yesterday. This morning? Or yesterday morning. So it looks like his jet, at least, is in Austin. Don't know if that means some of the other executives are there, but yeah. Green is good is someone's tagging me in this. Okay. Thank you, Mighty Tesla. So Rob's at $2.16 non-GAAP. Hey Dave Dave Lee is at $1.88. FactSet sitting at $1.52. And I guess the estimate from Estimize is there. Matt's sitting at $1.83. Matt Smith from Good Soil Investment. Jave Stevenson is at $1.55. So he's a little bit lower. Let's see. I think what Wall Street's really looking for, and they're probably not going to get it from Tesla this earnings call, is probably a guidance into deliveries for the end of the year, right? I think Wall Street is really like, hey, tell us how many cars you plan on delivering, and they're tired of hearing about we anticipate to grow at a 50% CAGR for the next 5 years on deliveries. Like they want to hear a hard set number. They're just old school like that, right? Like they need to plug it into their Excel spreadsheets. And so I don't think we get that from Tesla. But if we did, if Tesla came out and said, hey, we're expecting 950,000 vehicles to be delivered this year, produced this year, that would change the game. But I don't know if we're going to get that. There's just too many variables to worry about. Boring Company just got a massive project in Vegas as Raptor. Interesting. There we go. I didn't catch that. Rob Maurer is usually very close. Correct. Yeah, Rob's awesome. Does great work. Let's see here. CNBC has Tesla up. Okay. And now commercial far slum. Okay, I appreciate it. Thanks. I'm gonna have it ready on deck here. So $863 on Tesla, showing some weakness here in the last little bit. SPY is sitting up 30 basis points on the day. The NASDAQ is, just try to change this alphabetically. The NASDAQ is sitting here pretty, not so pretty, down 24 basis points. So some weakness macro-wise, which is kind of contributing to this Tesla quote-unquote sell-off or, little dip here. But, I think we're probably going to go into earnings around here, between 855 and 865, somewhere in there, I think is probably where we head into it. See here. Thank you, Robin. Robin says, hit that like button. I appreciate it. How many likes are we sitting at? Got about 900 people sitting in here. By the way, if you're new here, welcome. We talk a lot about Tesla stock. So if you're a Tesla fan, hit the like button. Helps support the channel. 220 likes. There we go. We're moving up here slowly but surely. Let's try to get to, if we can get to 500 likes in the next little bit here on the stream. I think we can do it. Okay, I got CNBC pulled up here in case they say anything decent for us. Let me just pull this up. Let's take a look here. She's saying anything about Tesla? Can barely read it. No, just labor challenges. Yeah, I'm going to turn her off for now. We'll see. Over 300 likes. There we go. Gained 100. You guys are great. The next resistance is at 250. You guys are hilarious. Okay, so look who's up on CNBC. Mr. Jim Cramer. There's a really funny Meet Kevin video if you haven't watched it already on Meet Kevin went back to like the last 6 months of Jim Cramer and how kind of he talks through both sides of his mouth a little bit about Tesla. He likes it when it's up. He doesn't really talk about it when it's down. It's kind of the way it goes. Hold up here. Thank you, Sharfo. We're at 350 likes now, folks. Almost there. Okay. 864 on Tesla. Palantir is down 2% on the day, which is becoming an all too common occurrence. Let's look at the EV company watch list I have pulled up here. Nikola is down 3% on the day. Lucid's down 1.74%. NIO's down 74 basis points. XPEV's down about the same. Toyota down the same. Honda down 21 basis points. Tesla flat on the day. BYD up 35 basis point, already closed already. A GM up about 1.6%. And Ford, wow, Ford's sitting up 3.7%. Pretty interesting to see Ford that high. I guess Ford's up on the news that Legacy Auto might get an upper edge on Tesla by banning them. Who knows? So, I'm just half kidding. Okay, let's pull this up here. And if you look at the financials on Tesla, we were going through the balance sheet the other week. I can't believe it's already Friday, or it's already hump day again. Friday is just around the corner. Fast week, but $16.23 billion on cash and cash reserves for Tesla as of last 10Q. $2.13 billion worth of accounts receivable. Remember, accounts receivable, I think this includes a lot of full self-driving deferred revenue. So there's something to take into account there. What else do we have pulled up? Remember, Tesla paid a lot of debt this quarter, so if we see a hit on cash, don't be too alarmed with that, because Tesla paid off its Giga Shanghai loans way early. So we're probably going to get to hear about that as well. So something to take into consideration around that. There's another ad on CNBC. Don't worry, there's nothing there. That's good to watch. At the moment, at least. Let's see here. Yeah, so John brings up the good point. John Wick saying Tesla made $1 billion on Bitcoin. That goes towards their balance sheet. It might go towards their balance sheet as whatever value for sure. But remember, it doesn't go in their income statement. So if just because Tesla's up on their investment, it should not affect upwards their earnings per share. That's the problem with an investment or impairment loss like Bitcoin for Tesla, is that if Bitcoin does dip, which by the way, Bitcoin is crazy strong right now, right? Bitcoin's sitting at $66,500. There's no upside really until Tesla's proven right with their thesis on investing in Bitcoin. There's a lot of anti-Bitcoin Tesla bulls out there. Gary Black being one of them. Doesn't like how Tesla took a portion of their cash and is investing it in something like Bitcoin, where they'd rather, he'd rather have them do share buybacks or invest into new factories. He thinks it's a higher return on invested capital. Perhaps. I think Bitcoin is one of those massive macro bets that Tesla is throwing a little piece of the pie into, that, hey, if all this printed fiat does go sideways, if inflation isn't transitory, if crypto is the future and Bitcoin hits $1 million or something, and I think Kathy Woods is about 500,000 is her prediction for Bitcoin, going prediction for Bitcoin right now. If that holds to be true, that little investment is going to be worth a lot, right? So Tesla closing bell talk next. Okay, appreciate that. Thank you, Chi-Town. So I have CNBC pulled up here. Okay, so there's also that, right? There's also that conversation we should have with Elon having to sell some of his shares. We've seen a lot. We've seen a lot of, and we're going to. So prepare yourself. We're going to see a lot of mainstream coverage on when Elon sells his Tesla shares. It's just going to happen. As soon as the filing comes out that Elon has sold even a small percentage of his shares, just get ready, because you know what's going to happen post that. Remember, I'll fill you in here to the best of my ability that I can. Elon is probably going to sell a portion of his shares because a lot of his options are expiring. When he exercises them, he's going to get a tax bill. When he gets a tax bill, he's better off doing it this year rather than next year if he thinks the tax rate's going to go up. So when that filing comes out, get ready. There's going to be something like that. Okay, share the news screen. Here we go. Pull this up.
But FundStrat's Tom Lee thinks there are more gains ahead. The firm just raised its S&P 500 year-end target to 4,800, up from 4,700. And joining us is Tom Lee, managing partner at FundStrat. So why did you take it up by 100 points?
Well, there's a couple of reasons for it. One, I think earnings are really affirming that demand is really strong for businesses and margins are holding. Entering a really good seasonal period for markets, especially into year end. And the third, which we talked about in our note last night, was the equities are exiting a 1 month consolidation or 30 days. That's happened twice earlier this year. Both times resulted in more than a 7% rally over the following 8 weeks. And so if you overlay that to today, we get to 4,800.
But Tom, if you look at some of the reasons for the consolidation, particularly during the month of September, Fed tightening, economic slowdown from very high levels, high persistent inflation, none of those have really gone away, have they?
They haven't, but as you know, sometimes the market looks at less bad as good. Inflation's an example that I think some of the pressures that were really evident, like used car prices or lumber, they're starting to roll over. From a COVID perspective, we've seen a really big retracement both in the US and in Israel. And with regard to sort of the narrative around the economy slowing, there's just ample evidence of pent-up demand, whether it's the pickup in international inbound travel requests, or if we look at credit card spending, I don't think we're really at that sort of peak everything because people are still quite nervous about COVID, and we haven't really seen a full return to normal.
We were talking earlier, Tom, about the extraordinary start to this month we've had, particularly for some cyclical sectors, double-digit gains for energy, 7-8% gains for sectors like banks and materials. Do you suddenly get worried that we're running too fast at the start of this month after the September pullback?
I mean, stocks have been pretty challenging for the last 8 weeks, and we know, talking to our institutional investors, they got pretty nervous, raised a lot of cash, got very defensively positioned, and we've only been rallying for about 6 days. I don't think that that's enough to kind of get people position squared. So I think most investors are underinvested right now in a time when stocks do pretty well seasonally. So I think, it has a chance to be kind of a melt up. I think 7% is kind of a low number. I think we could be, well above 4,800 before year end.
So within that, are you staying in the cyclicals? And what do you do with technology if you're bullish on the economy and rates continue to go up?
I think it's actually both technology and epicenter. Epicenter makes sense because, those are the things people were selling over the last 2 months, but that's really where the demand is recovering. Technology, I think, works because, number one, it's a big weight in the market, and Bitcoin's really affirming that we're getting to a risk-on environment. But also, technology is really your biggest solution to inflationary pressure. So I think investors are going to realize technology demand is going to pick up over the next 5 years. That's great for stocks like FANG and the semis and really the whole technology complex.
You mentioned Bitcoin. We've got to hit that, of course, with the new ETF. Tom, we know you're a long-term bull here. At 66,000 and after the launch of the ETF, do you pause in the short term or are you all in?
I think the ETF's a pretty big deal. We wrote about it earlier this week because it's really creating access to millions of investors to actually be able to own Bitcoin now through their brokerage account. We think the equilibrium price just from that increase in demand, let's say it matches the 2002 launch of the triple Qs, it could take Bitcoin to like 160,000 or higher in the next few months. But, Bitcoin is really a network value asset. It depends on adoption. And if you look at a Metcalfe model or regression, Bitcoin's not expensive here. And if you project it, you could still get significant upside over the next few years.
Are you surprised that we haven't seen a clampdown yet, or were you always expecting that?
Okay, whatever. There you go. He's talking about Bitcoin now. So I'll keep it up there in case they bring on any Tesla news. What I do find interesting, and I pull up some options order flow through black box options. We're getting some we're getting some decent call and put sweeps, kind of seesaw action going into earnings. The problem with looking at options order flow before earnings is that a lot of options order flow, it's hard to really discern what is insurance buying with puts and what's, let's say, bear bias buying. And I guess you could argue that, if it's, if it's sweeps coming in, obviously, you could talk about how that might be bear bias. And, an hour, about 45 minutes ago, we got a decent amount of 820 strike, 750 strike, 815 strike put sweeps coming in, 80K, 75K, 10K in this case, 73K. So some decent put buying, but that was about 45 minutes ago. As of late, the latest thing that we've just received is a put sweep for about 60K. And then a few minutes, about 10 minutes before that, an 890 call far out the money again, sweep for about the same, 70K. So just seesaw action, no general direction. Maybe earlier this morning, there was some more general direction with call and put sweeps coming in. And even if I filter out for, let's say, stuff that's over $500,000, kind of the big boy stuff that we got was about 30 minutes ago, we got an 870 call sweep for about 700K. Remember, that's at the money, so something to take into consideration there. But the same person looks like also bought the same at the money put. So just a long straddle being bought. A $1 million, actually, this one is a $700 call sweep, whatever. This is a $4.2 million 700 call sweep for the end of next week's option expiration chain. But to be honest, it's in the money. So though it is 4.23 million, a lot of this is intrinsic value. So it's, I don't value it as much, personally speaking. So I'll keep an eye on this. as we move forward here. But we're only going to be looking at sweeps moving forward. So right now, Tesla is sitting at $864, pretty much on the dot. So again, probably going to close around here. Volume weighted average price is 864 on the day. So really just pretty much where we're sitting at right now. So thank you for the super chat. 400 rupees. Okay. I appreciate that. No. Essentially, only essentially. Thanks for the support. Let's see here. So, you know who had a really interesting point was Adam Jonas. Adam Jonas. He came out on CNBC the other day and he said, he had a great quote. I'm gonna try to pull it up here if I can. It was essentially, Elon is literally solving the problem of reusable rockets and sending people to Mars, and we don't think he'll solve insurance for Tesla. Like, I just found that the best. And yes, we're officially now green on the day, so good juju coming in. And it was like the best quote. And I can pull it up here, but we got 15 minutes here, so I'm going to try to stay focused on the close. We got 15 minutes left. Okay. Yes, I don't know. We got 15 minutes. I don't know if I'm going to buy back the short calls positions or not. They're 1,020 for me on November 12th, but they're covered, right? So remember, never financial advice, but I would never do naked calls on really any stock ever. The problem with naked stocks is that technically stocks can go theoretically speaking, go to affinity. If you ask a mathematician, right? So technically you can have infinite losses with naked calls. Naked puts is just as dangerous, but if they're cash secured and you're willing to buy the stock at that price, no matter what happens, a different story. But yeah. I think we probably are flat. Like, we might be green tomorrow at some point. But I think we probably close closer to flat tomorrow is my going theory right now. And if we're up, it's 1 or 2% or something like that. We're at that point. If you're long calls, I just don't know how you're going to profit from that on weeklies or something. That's just my guess. Hey, thanks, Marco, for the $8.69 €8.69 is it pence you guys call it? Super chat. Thank you. Again, my ignorance is coming out every time you guys donate from like all these currencies. I love it, but my ignorance shows every single time. I appreciate you guys super chatting though. Let me just see here. 1 second. Okay, cool. Hey, David says new all-time high tomorrow. Ooh. I mean, I'm so for that. I wouldn't even care about the short calls. Again, got shares too, so Alex says, I doubt we will be super green tomorrow unless margins are crazy or deferred tax is recognized. Hey, Alex, tell me about that. There was something going around about deferred tax and whatnot. I haven't had time to catch up on the Reddit board, but I know it was on there a while ago. Yeah. Euro cents. Okay, so it's cents as well. Okay, we got Josh Brown talking on CNBC. I don't think they're talking about Tesla though, so I'll keep it off here. But 865, some sort of strength into close, but nothing massive coming in. We have 12 minutes here to close till the earning report comes out. I've pulled up as well. I pulled up earnings or actually Gene Munster just tweeted, so I'm just going to read this. Tesla earnings tonight. It's all about automotive gross margins X credits. Like I was saying, the street is expecting 25.1%, down from 25.8% in June. Those are a scratch for me, right? If it comes anywhere in this range. Headwinds include component environment and cost from air shipping parts. The tailwind is the price increases. Griffin tweeted, Gene says, if they are flat sequentially, it's a big win and a sign that Tesla's inching towards tech-like margins. Today, Tesla operating margin is about 2 times more than Ford and GM, for sure. And remember, this is without 4680 battery cells. This is without the use of those large, very massive gigapresses that are going to happen. Yes, a lot to look forward to. Who's my favorite commentator on CNBC? I'll get back to you, Martin. I'll get back to you. I mean, I guess anyone is a contributor. I'm not sure who classifies as a contributor or a commentator. I don't know. I mean, I definitely watch all the segments that Kathy Wood goes on it with, right? So, but I pulled this up. So this is Q2 shareholder deck. No, I didn't get early access. I wish to Q3 shareholder deck. Trust me, I checked on the site. The shareholder deck is not live yet, unfortunately. But as soon as it is live, we're going to pull it up. Thanks for subscribing, y'all. So last shareholder deck showed 25.8% ex ZEV credits. This is the first number we're going to look for live on the stream once this comes out. Okay. So let's take a, as that goes, so as soon as the shareholder meeting comes up, that's the first thing I'm going to take a look at. Moving forward from there, remember, I'll just go through a debrief of what happened last quarter with Tesla. Tesla revenues top line were 10.2 billion on auto rev. 354 of that was regulatory ZEV credits. The gross profit was 2.9 billion. So the gross margin, including ZEV credits, is 28.4%. Their operating margin, skipping down the line, it was 11%. Remember, in Q1, it was 5.7%. In Q4, it was 5.4%. It was 9.2 in Q4. So, 11% was killer. The net income, GAAP-wise, was 1.1 billion. Non-GAAP net income was 1.6 billion. And so that brought us an earnings per share non-GAAP of $1.45. Okay. And then remember, free cash flow last quarter was $619 million. Almost said billion. And that ended Tesla with a little bit down on cash, about 16.29 billion. So remember, Tesla's cash reserve, from my projection at least, should be down a little bit, right? If they paid off those China loans, Giga Shanghai, that's something to look at. Then we're going to read through what they have to say. Production, we already know. Last quarter was 206,000 on Tesla for vehicle production and 201,000 last quarter for deliveries. And then we got some updates about different gigas. So we're going to go through that as it comes live. But nothing there right now to look at. So we'll see. Exciting times, folks. We got 8 minutes left till close. Let me just pull up my Interactive Brokers here 1 second to make sure everything's good. You got Pinterest and on CNBC. Nothing really to look at there. Some 920 strike call sweeps coming in, folks. Some 920 strike call sweeps coming in, totaling about a little bit over $100,000. Wow, check this out. We just got a January 2022, 1,000 strike call sweep. So far out the money, right? For $660,000 worth of premium just a couple of minutes ago, actually. And we got another one, probably the same buyer, for another $538,000. Some large call sweeps coming in far out the money for 1,000 strike for this January coming up, January 2022. Interesting. Okay. So let's keep an eye on that. And it looks like Tesla is liking that news, or some sort of Delta movement's happening there. But something happening here. Yeah, we don't know if Elon is going to be on this call. If someone in the chat knows, let me know. Yeah, folks, don't worry. I got the oranges here. I got the Juju on deck. I just, if you don't know what I'm talking about, if you're new here, good Juju is eating some sort of citrus. Okay, let me just make sure. Do I buy back these calls? I don't know what to do. Hold on. What is Juju? Juju's like, good vibes only, positivity only. It's a channel special. You're not going to hear it outside of this channel, but there's almost a direct correlation we're finding with the amount of oranges and citrus consumed and Tesla stock price. Don't know why. I don't question it. But 900, November 19th, we still have 30 days till then. If Tesla were to go up, let's say $50, let me just do some math here. Oh, it's November 12th, pardon me. November 12th, start eating your oranges. Almost. I'm just about to finish my tea here. That'd be pretty gross, right? Buy back your calls. It is. It's about 23 days away. That's the only way I could even get some premium off of this. The problem is I know that these are going to decay. And 1,020 is a far strike for 23 days away. Will I be live? Yes, I'll be live. I'll be live for the earnings call. Indeed. So stay tuned. Hit like if you're enjoying the stream. How do I keep talking for 3 hours straight? I don't know. That's a good question. I don't know. Yeah. I don't know if a better question to ask is why people are tuning in to hear me talk, which is probably more piquing my curiosity. But I appreciate you guys tuning in. Decay for sure happens every time. I mean, that's the thing, right? But here's the thing, the risk reward you have to do for yourself, right? You're getting $2.40 per contract. Like, it's not like you're getting $7 and these will decay to $4 even if Tesla goes up. You're getting $2.20 depending on what you sold it for. Man, I don't know what to do. We got 5 minutes left here. Thank you, Trent. Appreciate that. Very nice, Michael. There we go. Leave and come back. I got 5 minutes, but no, these are short, right? So I'm already holding the 950 for January in this account. I don't know. If Tesla comes out and they're here's my thought process. Very scientific, so you buckle up. Elon's been in a very good mood this week. Very good mood. He's been memeing around. He's been talking about how Tesla is literally going to unlock the largest asset valuation in history. And I'm only getting $2.40 per pop per con. I'm going to close these out. I do this every quarter. I say I'm going to sell premium. Premium, mind you, is very low on Tesla right now. I say I'm going to sell premium. I end up never selling premium because I'm a Tesla bull. I always start thinking, why bother? Tesla's going to end up beating it out the water and climb. Like, I always have these bullish thoughts. So, that goes to show you that rationality always doesn't win in trading. Although rationality should. Just, okay. I'm out. Whatever. I bought them back. I have the order in for them. Whatever. Watch Tesla now just go flat like I kind of think it's gonna go. And but here's the thing, right? Upside is what? You make $2.40 per contract. So yeah. Is there anything on CNBC? Yes, there is. Here we go.
They've ballparked that, but no, I agree with you. And in the past, Tesla did best when there was just fewer specifics around it at all, and it was just kind of the big picture idea: we're saving the world. And it's become a little bit different right now. The stock looks great, but sort of all the auto stocks, and it sort of also seems to be operating on its own power source. This stock, as it often does, which is like the relentless buying of expensive options that drag the stock higher.
Well, almost all the way back up to the high.
900
really
or so
high.
is the high.
Yeah, we're at 864. Josh, what are you watching into Tesla?
Two things. The first is they actually don't do the conference call until 5:30. So you could have 90 minutes of gyration in the aftermarket, depending on what
Pacific.
that number looks like. The second is Elon Musk on the last conference call mentioned he might not even bother showing up to these anymore. So I think people will be interested to hear if he's even part of the call. That being said, I agree with what Mike said. Technically, this stock is set up for a huge breakout. You can see that 900 was resistance during the expensive stock mania, let's call it, meme stock mania in February, March. It's been a long road back. It's right back at that level. If they don't disappoint tonight, I don't see why this wouldn't be a 4-digit stock once again.
Wow, look at that.
I like it better when you guys disagree. 2 minutes to go in the trading day. Mike, what are you seeing in the
I love
market
Mike.
internal?
I'm seeing you tomorrow night, Mike.
Yeah, Yeah, we'll find something to disagree about that, I'm sure, but I look forward to it. Internals actually look pretty decent. I mean, the indexes have actually sagged a little bit. The ETF volumes are not looking necessarily all that interesting, but very, very strong breadth. The average stock is outperforming. Small caps are doing pretty well. So you see there well more than 2-to-1 advancing versus declining volume. Kind of interesting interplay of growth versus value. Look at the year-to-date chart. We've talked so much about which one should you be in. Well, it almost didn't matter. Russell 1000 growth.
Okay, okay,
Russell 1000.
let's turn this off. Okay, so interesting, nonetheless. He's saying, CNBC's saying, I forget the name of that guy. Someone knows, let me know. He's saying, oh, market closed. There we go. Sorry, didn't usually have a countdown, but there we go. Market's closed. I bought back those short calls. We are all long. Let's go. We're not even Theta Gang this time around. And Tesla closed at 865.80. Okay. Nothing's out in terms of a report yet. I will continue to hit refresh on the Tesla shareholders investor page. So stay tuned for this. Stay tuned for this. We finished green though on the day, right? Yeah, we finished very slightly green on the day. So stay tuned. I will have everything ready to go as it comes out. I'm hitting refresh like a madman on the page. So let's go. It's an exciting time, folks. And it's an exciting time. Remember, first thing we want to look at is automotive gross margin x ZEV credit. I want to take a look at that. Let's see here. Okay, refresh, nothing here. It might take about 5 or 10 minutes. That's usually, 5 or 10 minutes about normal that we have. Constantine says that we finished with the doji candle on the daily. Yeah, markets are unsure. Markets are unsure for sure. Sorry, little repetition there. Thank you, Exit, for the $10 super chat. Good luck to all the Tesla holders tonight. Appreciate that. Thank you, Exit, for the super chat. That's US dollar. I know that currency. I don't sound ignorant. Yeah, so doji on the day for sure on Tesla. I'll show you guys here. Remember, doji candles usually indicate some sort of uncertainty in the market, and that's, I guess, exhibited pretty well with my commentary about whether or not I should be short premium going into this earnings. Here's what really tipped me over the edge thinking about it even was that, folks, Berlin and Austin are right there, right? Berlin and Austin are right there, and we know what happened with Shanghai. So that's how I'm feeling right now. Tesla, remember, post market, don't pay attention too much until the report comes out on Tesla. And I'm refreshing. Don't worry, I'm refreshing. Nothing out yet. I'm eating an orange and grateful to be all in on Tesla, says Josh. Josh, got my oranges here. Thank you for the Photoshop again. I shot you out on yesterday's video. Okay, I think it's time to eat some oranges, folks. Let's peel the oranges in anticipation for the report to come out. I'm still long SPX. I forgot. I'm still long SPX, and this doesn't expire till when? Oh, I got 20 to the 22nd. Okay. 450, 45.70. All right, first orange of the day, first juju of the day is in. This is bullish on the earnings report coming out. Cheers, folks. That's a good point, Lunaris. As soon as the report comes out, we're going to see massive fluctuation on the stock price. Yep. Okay. Nothing yet. I'm refreshing faster than like if someone heard me with how much I'm refreshing, they'd be questioning what I'm doing on the computer. Like I'm just like this. Oh, whoops. Benjamin Sanders with the $19.99 super chat. Thank you. You're very quickly becoming my favorite Tesla tuber. Let's go. Thank you, Benjamin. Your support is much appreciated. It's like the New Year's countdown. Jason, how's it going? You got to get the terminal. Yeah, if I have a cool, 4K to spend per month, right? Or something like that.
Quickly becoming my favorite $TSLA YouTuber. Let's go.
I appreciate that. Yeah, I do put in the work. I've been streaming a lot as of late. A lot of content coming out on the channel. If you're new here, you have no idea who I am. If you like Tesla, you probably like this channel. Here's the thing. I don't even know if the terminal would give me an edge. Like, you know, if you guys don't know, by the way, you guys can follow like at Delta One on Twitter. Just his name is Walter Bloomberg. Essentially just reposts everything that comes up on Bloomberg. That's usually what I do there. Okay. Oh, by the way, I should go through the say questions. The most highly voted question is by share count. When should we expect the first vehicles to be delivered with the 4680 battery cells? An anonymous institutional investor asks. Steve, how's it going? You guys are hilarious. Okay, almost there, folks. Couple minutes probably until our news report comes out. Bam! Jeffrey Maines with the $20 super chat. Tesla to Mars, hit that like button. Thank you, Jeffrey. Appreciate that a lot. It's out. Tesla dropping, you guys are saying. Okay, let's check it out. Okay, it's out. Shareholder deck is in. Scrolling down. Tesla hitting a 28.8% ex ZEV credit gross margin. Holy cow, that is huge. 28.8% ex ZEV credit. That's nuts. Okay, so let's look at the bottom line here. Earnings per share on a GAAP basis is $1.44, non-GAAP $1.86. I think James was pretty close on this, hey? Wow, that is massive. So let's go through the numbers. Automotive gross margin or automotive revenue for the, and I'm gonna move my fat head here. Revenues for the quarter auto-wise is 12-ish billion. $279 million only of ZEV credits. A gross margin of 30.5%. I think that must be the highest gross margin in history. Holy crap. Okay, bear with me as I go through. You know what I'm going to do? I'm just going to read what they have. Third quarter of 2021, Tesla says, was a record quarter in many respects. We achieved our best ever net income, operating profit, and gross profit. Additionally, we reached an operating margin of 14.6%. Wow, it was 11 last time. And that was up from 9.6 last year. 14.6, that's massive. Exceeding our medium-term guidance of operating margin in the low teens. Perhaps more impressively, this level of profitability was achieved while our average selling price decreased by 6% year over year due to continued mix shift towards lower priced vehicles. Our operating margin reached an all-time high as we continue to reduce costs at a higher rate than our declines in average selling price. EV demand continues to go through a structural shift. We believe the more vehicles we have on the road, the more Tesla owners are able to spread the word about the benefits of electric vehicles. While Fremont produced more cars in the last 12 months than any other year, we believe there is room for continued improvement. Elon said as much at the shareholder meeting. Additionally, we continue to ramp Shanghai and build new capacity in Texas and Berlin. A variety of challenges, including semiconductor shortages, congestion at ports, and rolling blackouts have been impacting our ability to factories running at full speed. Folks, they're achieving this while all of these challenges are happening. It's just nuts. We believe our supply chain, engineering, and production teams have been dealing with these global challenges with ingenuity, agility, flexibility that is unparalleled with the automotive industry. We'd like to thank everyone. That's nuts. That is nuts. Holy cow. Okay, let's look at the stock price. I'm sure you guys care about that. Stock price is going up after hours, albeit, not massively here. And check this out.
Automakers for their electric vehicle credits. Most were expecting it to be somewhere in the range of 24.6, maybe 24.7%. Came in at 28.8%. I have not checked if that is an all-time record for Tesla, but those are really strong automotive gross margins.
Really
strong. We're going to dive back through the results, and don't forget, we get the Tesla conference call at 5:30. Will Elon Musk be on it? That's one of the questions people are wondering about. Guys, back to you.
Philip, thanks so much for that. As you said, the consensus for that margin closer to about 25%, so a decent beat there. Mike, the stock's only up about 0.4%.
It's the juju.
These decent numbers, but again, you look at its summer, and the stock never really had a significant pullback when other parts of the sort of highly valued tech sphere, if you want to put it in that bracket, did have a much bigger pullback.
In the summer, that's right. It's been kind of on its own clock, so it had that tremendous parabolic move from late last year through the S&P inclusion all the way to 900 in January. Then it cracked. and you know, actually did struggle a little bit. I think got under 700 for a bit. So it's made its way back. As I said, it's up 30% since the last earnings report 3 months ago. Good numbers. That's not a really resounding revenue beat. Not sure if that's a reason for some hesitation, or you just want to wait until you see what, if anything, they say on the call about the pacing of you know, the quarters to come in terms of production deliveries.
We'll talk more Tesla in a moment. We just got IBM numbers out.
Screw you, IBM. Wow, holy crap. So and remember, guys, we know this. Post earnings, Tesla can have a massive. Tesla just got almost a 15% operating margin on this quarter. And yes, we are red on after hours. This doesn't mean anything, right? The excitement in my voice is long term, right? You know, those shares are becoming very valuable very fast. And so remember, after market, really, we're going to see this. It's usually a sell the news event. My last video was thumbnailed sell the news. You know, like I said, my guess was we probably are flat tomorrow. And honestly, long term speaking, remember the 3-day rule. Don't forget about the 3-day rule. There's no way to put this other than excellence is coming out of the earnings report right now. Wow, this is unbelievable. Profitability. Let me just make sure. Yeah, our operating income improved to $2 billion in Q3 compared with the same period last year, resulting in a 14.6% operating margin. This profit level was achieved while incurring stock buyback expenses attributable to Elon of 190. Christian with a super chat. Thank you very much, Christian. Let's go Tesla, he says.
Tesla. Biceps rocket, rocket, rocket.
Thank you very much, Christian. $11 super chat. Wow. Okay, so remember, cash. I talked about how cash is probably going to go down. Quarter end cash and cash equivalents decreased to $16.1 billion, driven mainly by net debt and finance lease repayments of $1.5 billion, partially offset by free cash flows of $1.3 billion. Our total debt, excluding vehicle and energy product financing, has fallen to just $2.1 billion. Our total debt, I'm going to repeat that, our total debt, excluding vehicle and energy product financing, has fallen to just $2.1 billion. That's all the long-term debt pertinent to factories that there is. Okay, so let's read about factories. I'm going to skip over Shanghai. I'm going to go right to Berlin. Factory build-out remains on track with testing of equipment well underway in Berlin. We expect to receive final permit approval before the end of this year. Okay, well, I guess that's partially why we're not seeing a massive increase in the stock price. Autopilot and FSD. In Q3, we hosted AI Day, our recruiting event to attract the best AI talent. After presenting our end-to-end vision of full autonomy, from fleet data collection, labeling, simulation, neural net training, vehicle processing, as well as our next generation neural net training chip and humanoid robot project, we've received an overwhelming number of applications. In October, we started to expand our FSD City Streets beta to more drivers, based on demonstrated driver safety and attentiveness measured through their safety score. We continue to monitor fleet data closely to help facilitate a smooth rollout. Vehicle software, they had a new app. I'm just going to move forward from that. Battery and powertrain. The 4680 in-house cell project continues to progress. We're producing an increasing number of battery packs for testing purposes, and so far the testing results meet our expectations. Good news. The front and rear body casting, both needed for our stretchable battery pack architecture, are being produced in Texas. Good news there. Energy storage deployments increased 71% over year in Q3, mainly driven by Megapack deployments. We recently announced our Megapack factory with a 40 gigawatt hour capacity, which compares to our total Megapack deployments of only 3 gigawatts in the last 12 months. Very exciting times. Okay, something about safety score here, folks. Take a look at this. In Q3, we rolled out our safety score functionality, which will be used for our telematics insurance product. Okay, hinting at something there. We actively monitor braking, turning, tailgating, forward collision warnings, and forced autopilot disengagements in order to more accurately predict the probability of crash. The system will continue to be fine-tuned as we receive more data. We've also launched our telematics insurance product in our first state, Texas, in early October. We believe our insurance premiums will be able to accurately reflect the chance of collision better than any other insurance product on the market. Additionally, we will proactively communicate to the user what driving adjustments need to be made to decrease probability of collision. Remember, Tesla has a data advantage to say the least. like, you know, this is nuts. Volume outlook. Okay, so this is interesting, folks. And as I go through here, I think it's important that we read this. So sorry if it's a little bit boring. Volume. We plan to grow our manufacturing capacity as quickly as possible. Over the multi-year horizon, we expect to achieve a 50% average annual growth, blah, blah, blah. All right, nothing's changed here, folks, around that. Yeah, okay, nothing really. Product. We continue to target our first Model Y production builds in Berlin and Austin before the end of this year. I'm assuming that means with 4680s. The pace of the, and that's from Cato Road. The pace of respective production ramps will be influenced by the successful introduction of many products and manufacturing technologies in new locations, ongoing supply chain related challenges, and regional permitting. We are making progress on the industrialization of the Cybertruck, which is currently planned for Austin production subsequent to Model Y. Okay? Subsequent to Model Y. Wow. And then there's some photos. This is Berlin, Giga, Texas. Wow, check this out, hey? Texas is huge. Folks, and that's just, wow, just a great quarter overall. I can't get over the 28.8% gross margin ex ZEV credits. 28.8, and in a quarter, mind you, that there were so many supply chain challenges. Just nuts. Yeah, no thoughts. Berlin and Austin not counted in yet, I think, says Daremaster. I don't know. Listen, as soon as they start delivering, I think all this will change anyway. So, you know, I'm not too butthurt about it. And obviously Tesla is pretty much flat after hours, or if you want to say 1.2% down. So we'll see if the earnings call changes anything. But if you talk about long-term Tesla, and this is why you want to be Theta Gang, I guess, right? And I don't think they sold any Bitcoin, at least the report doesn't say so. I saw a comment about that. This is why Theta Gang is popular, right? Because amazing numbers can come out, and yet Tesla is flat or red. And remember, that's because of the amount of trading firms and hedge funds that front run Tesla from strong deliveries to today that look to sell after hours or towards the end of the day or yesterday. That's what they're in the business of doing for Tesla, right? So remember, 3-day rule. Once all these front runners are out, once all these hedge funds have sold their positions, let's say, that's when you might see a fundamental move in the stock price. KM did some math for us, folks. KM says annualized EPS is now $7.44. At a 150 PE ratio, Tesla is now worth $116 per share. And right now, if 744 is correct and we're sitting at 865, let's just do the math real quick. That gets us to a PE of 116 is the PE for Tesla, if that EPS is right. So Joshua says, would be cool if they gave revenue guidance for quarter 4. Tesla doesn't do that. Tesla is, yeah. Hey, look at this. There's a Sharma on CNBC. Didn't know there's another Sharma in the world. Just kidding. Tesla doesn't like to give, in quarter 4, we project to deliver or produce 290,000 vehicles. Like, Tesla doesn't do that. And that's why they get hated on by Wall Street a lot with their analysts. That's exactly why. So after hours, just flat, nothing burger action so far in Tesla. Tesla killed it. We'll go on Twitter and we'll look at reaction. But I gotta say, like, Tesla really killed it on their earnings. Let's see here. Okay, G Munster. Tesla more than delivered on the most important metric. Automotive, like I said, automotive gross margin ex ZEV credits. 28.8. Street was expecting 25.1. September profitability is the latest data point that Tesla's business model is better than traditional auto. I bet each year that the company will inch towards a mega cap tech operating margins. Remember, we'll go to hypercharts.com. Go support Hypercharts, not affiliated with them. And you look at operating margin, right? Let's go to Ford. Let's just humor ourselves for a second. Let's go to Legacy Auto for a second. Let's go to Ford. If you look at Ford's automotive gross margin, sorry, their operating margin, I'm saying. See here. Oh, right. Let's do annual, by the way. Annual margin right here. Their operating margin, Ford's last quarter, was negative 3.47%. The quarter before that was 0.03%. The strongest quarter in the last, sorry, these are years, not quarters. So last year it was 0.3%, 0.03%. 2018 was 2%. The best year that they had was 2015 in this graph, and it was 4.66%. 4.66%. Now that's not a quarter, that's annualized. If you look at the quarter, the best operating margin quarter that Ford had was 6.8%. Tesla just hit 14.6. Was it 14.6? Insane. Operating margin right here, 14.6 last quarter. And this is without 4680. This is without Berlin and Austin coming online. This is without the gigapresses in action, single casting. This is without a lot of other technological adoption that's going to come with Tesla vehicles. Can you guys tell I'm excited? I don't know. Yeah, remember, folks, after hours trading in Tesla is like this. After hours trading in Tesla is going to be like this. It will past history doesn't always indicate future results, but man, this is why I wanted to be short theta. But you know what? Who knows what happens on the earnings call? You never know. Typically, sometimes what'll happen with like mega tech stocks is like, the company will have their earnings report come out, and then on the earnings call, something gets said that is materially affecting what people are putting into their future predictions of the stock. And quite honestly, that can shoot up the stock or shoot down the stock. So the earnings call is going to be key as well. We have another hour to earnings call. Absolutely. Hey, we're only down 50 basis points, to be honest. Tesla could be down 5%. So I'm calling a flat after hours on this news, even though it was a killer earnings report. It's sad, but I'm calling it a win almost right now, because that's just how front running works, right? Obviously, people are buying it post front running as well. So, yeah. What are your guys' thoughts? Let me know in the comments. Do you think Tesla, what are you guys' thoughts on earnings? What concerns you? What excites you? What is something about today's earnings report that you're surprised about even? Daniel says Tesla to the moon, but not today. Fair enough. Ben says gonna tank, but hype for lower debt. Lunar says I think Tesla services and others are starting to have close to 0% margin and going to be positive in the next 2 or 3 quarters. Really great. Yet yeah, it's funny because you talk about services and other like energy and stuff. They're almost not even accounted for in a lot of, I should speak for myself, for a lot of bull cases, right? I don't even really look at energy. I just look at auto. But you're totally right. Mega Shane says, I hope it falls more so I can buy somewhere cheaper. It's kind of the classic case, right? Where a company shows you that they're improving exponentially. And should the stock come down, for a long-term investor, that's kind of a gift in a company that you believe in long-term and that you feel better about. Like, you can't look at this earnings report and be like, Tesla has declined in any fundamental way. In fact, it's exponentially gotten better. Jason says mega pack capacity expansion is fire. Yeah, that's going to be interesting to look at on how their profitability comes through there. What is it? 40 gigawatt hours? Paul. Okay, we got some CNBC. Thank you for putting this up. Let's see.
So really, going into the quarter, the most important metric is gross margin and X credits on the auto side. They did 28.8 versus consensus of 26. We were a little bit below that at 24. Again, because expectations had creeped up on the higher numbers earlier this month. So I think the setup was probably buy on rumor, sell on news, and I think you'll probably see that change as these numbers are strong across the board.
Laura, what are you looking out for most of all on the earnings call?
I'd like to hear how they plan to cope with the ongoing chip shortages and port constraints. This has been plaguing the entire auto industry, and Tesla made some changes that they said in prior quarterly reports may not be sustainable. So I want to hear more on that. I think also shareholders, many of whom are Tesla owners or prospective owners, really want an update on the Cybertruck design and what's up with the $25,000 car that Elon Musk teased last year at the annual shareholder meeting in Battery Day.
It's not happening anytime soon.
What about that chip shortage, Jed? What's your sense on how Tesla's navigating it and whether it's impacting sales?
So I think what we'll get, I mean, we already kind of got a preview. So, and it didn't come from a Tesla shareholder meeting. It actually came from VW inviting Elon to speak to VW executives. And one of the things that he talked about was how he had Tesla engineers redesign the chips so that they weren't exposed to chips that were in shortage. And that goes to sort of the culture and probably the most important data point, which is that it takes Tesla 10 hours to assemble a Model 3 and VW 30 hours. And that's kind of the advantage in how to think about how far in front of the pack Tesla is. So I think that's largely that's what I think we'll get from them on the call. And I think that's an important data point.
Jed, on the financials themselves, I mean, the margin was attracting some attention. Was that an important beat for you, or is that not the most important metric?
Yeah, it's important for a few reasons. One, it shows the difference of profitability between cars manufactured over in Asia versus the US and what that means in terms of Berlin and Austin. I think those are two key points that we want to key in on in terms of timing of these other factories, because that's going to be the production ramp that'll drive additional growth. It also shows a mix shift. So we saw the S come back in spades with a 6-month backlog on that. We haven't seen yet the X. And so any commentary around the X could also be another positive, is that's likely to carry a higher margin too.
We'll see if Mr. Musk joins the call. Jed and Laura, thank you for your first impressions. We appreciate it. Up next on the show.
Folks, they got to get me on CNBC. I'd love to be on CNBC and just shoot the shit with those guys. Okay, listen. Listen, we've been going for what, 3 hours here? 2 feels like 3. It's been almost 2 hours. And listen, I'm not surprised with the after hours action. If you're surprised, you're probably new to Tesla, right? In the last, year and a half, 2 years, Tesla post earnings is not going to rally on after hours trading. Now, if Tesla comes up, or if Elon comes out and Elon's on the call and he says something about Cybertruck or model $25,000 model, we might get some movement here. But I consider this a win. We're flat after hours when we know how much front running has gone on Tesla. In case you needed some perspective, here's some context. This is the daily graph of Tesla in the last 2 weeks. Have some perspective. Right, where we've come from, 750, as low as 719 on September 20th to now October 20th, sitting here pretty at 865. We got to have some context around that. Front running was happening for sure. Us sitting flat right now, guaranteed, if Tesla didn't blow these numbers out the water and they only merely met expectations or slightly exceeded expectations, we would be down right now. But Tesla killing this earnings call is really why we're flat, to be honest. Let's see here. Okay, so ZEV credits. Listen, ZEV credits are down this quarter, but I'm not sure how much of that has to do with the deal that Tesla has with ZEV credit sellers, or with ZEV credit buyers, I should say. ZEV credits were only 279 credits. Remember, you only get ZEV credits based on how many ICE vehicles are sold. So if I'm Fiat Chrysler and I go, I'm looking to sell 1,000 cars, I need to buy 1,000 ZEV credits, right? Or whatever the math is. And so the more cars that I make ICE, the more credits I need to buy, the more revenue Tesla makes. So yes, this is it's confounding with a variable of their deal, but also if we know that chip shortage or the lack of demand in ICE vehicles, like Kathy Wood says, is true, we know that there's also going to be, by proxy, less zero emission vehicle credits given to Tesla. And you can make the argument that internal combustion engine legacy auto is hiding behind the veil of chip shortage, when really what we might be seeing is a mass movement away from ICE manufacturing altogether, or ICE car buying altogether. I have some friends, and let me know. Like, I have some friends who might be in the market to buy a car in the next year and a half, 2 years, who have told me, and they're not Tesla fans by any means. They're not even pro EV, but they've come to me recently and they said, "Hey, like, my next car, I'm just hoping that I can use my car for another 12 to 18 more months to save up some more money to have an electric vehicle, whether it's, Nissan Leaf or ID3, I don't know what it is, but people are going electric, whether it's Tesla or not." Mind you, these friends that I'm talking about are mostly talking about the Model 3 after riding in ours. They just love it too much. But at the end of the day, I think a lot of consumers are saying, I think our next car has to be electric. And let me know if that's true with you as well. Like, let me know in the chat if you guys think your next car. And by the way, if you already have an electric vehicle, let me know. But if you don't have an electric vehicle right now, will your next car be an electric vehicle? Doesn't have to be a Tesla. Totally agree with that sentiment. Simon says, on ICE vehicle sales being depressed. Kathy Wood, has gotten a lot of flack for that opinion, but I think there is a kernel of truth to it. Daniel says, my next car will be electric for sure. Ding says yes. And mind you, there's selection bias here for sure. So Imran says, hard to give him my GTR. Fair enough. I mean, I saw a video yesterday. I'm trying to pull it up here. I saw a really funny video of someone putting in Lambo sound effects into their car, into their Tesla through the speakers. Tesla's my next car. Waka says he's going to get a Lucid. All right. You're going to wait another 2 or 3 years, it sounds like. Chris says almost certainly a Tesla. Casey says if I can get an EV for 25 to 30K, it will be. Fair enough. Awesome, Will. Marco says next car is 100% EV, 99.999% Tesla. Blake says I bought a Model 3, proud of my car. It's just part of this earnings report. Hey, that's true. Part of your It's always a good time to be part of the financials. STC says my wife is scared to drive the Model 3. I'm working on her to drive it. We'll be a 2 EV family. Hey, you know what? And C-Tung is saying this, or C-Tig is saying Leaf and Skoda. Next will be a Tesla. The Nissan Leafs are decent if you're looking for a used car under $10,000, essentially to just bring you around town. If you live in the city and you drive at most round trip 20, 30, 40 kilometers at most per day, and you just do here and there shopping or going around town and stuff like that, the Nissan Leaf is great for that. You should really, because you can't really get a used Tesla for like $10,000 or $15,000. You can get a really good used Nissan Leaf for 10 or 15. Some are even like between $5,000 and $10,000. I love my Volt. There we go. The Booster says he ordered a Plaid, February 2022 delivery. Oh, that's awesome. Hey, it's just around the corner. Thanks for subscribing, y'all. Didi says, are you going to check out the Lucid showroom in your city? Yes, I am planning to go to the Lucid showroom. I am. Should I bring my camera? Should I do an episode at the Lucid showroom? I also think Polestar has a showroom coming up here, or maybe they do already. Should I do like an episode on Lucid and their showroom here? Okay, so there is a Polestar here as well. I didn't know that actually. The heck? Waka saying yes. Babak, how's it going? Yes, Cameron, bring someone. Do you think, okay, I'm behind on the Lucid talk. Do they give test drives? Probably not, right? Like, I don't think there's very many cars in production. Like, if I don't know, cross my fingers. Maybe if there's a test drive available. Can you imagine if I did like a Lucid test drive, one of the first ones? Ooh, that'd be kind of dope. Thank you, Sharful. Appreciate that very much. Blake says, after my family rode Model 3, dad ordered a Model Y and sister ordered an X Plaid. That's awesome. You know what's funny is my dad ordered the Model 3. He made me test drive it a long time ago. He ordered a Model 3. A year and 6 months later, I got the Model 3. It's just, once you drive, sorry, I'm not going to try to speak in generalities because, you know, your situation might be different. Once I drove the Model 3, it was game changing. Once I drove a Tesla, it just made sense, like immediately. So I encourage you guys, if you're Tesla investors and you haven't driven a Tesla yet, go get a test drive, if it's even possible with how much demand that everyone's been having. But go get a test drive. I'm telling you, it'll help your conviction for the better or for the worse, right? Hey, Michael's in Seattle. There you go. Not too far away. Get a sponsor. Get a sponsor. I accepted my first sponsorship on the channel, and that reminds me, I got to make a video and send it to them for approval. It's with Skillshare. It's only one video though, but they reached out. So Daniel says, yeah, I should do some test drives. You have the platform. Folks, I appreciate the motivation because, to be honest, it's hard testing. And actually, it looks like Tesla's coming back green here, actually, folks. We're only... we're about to go green. I actually need to do more car content. That's one of the things that I want to add to the channel. I'm just... do you guys ever get analysis paralysis where you want everything to be so perfect? You want the microphone to work properly outdoors. I've never done that. You've done... It's funny. You get analysis paralysis. You're like, I need this to be right, that to be right, and then with that logic, you just never start or edit. In my case, I have a lot of the footage from our road trip. I've yet to go in and edit it because I'm not a perfectionist, but I'm just cautious with the content that I put out. So Waka says, please test drive or at least see a Lucid. You will sell all your Tesla shares for a Lucid, far better quality. It's funny to hear that, Waka. I mean, I don't think there's anyone in the world really that's driven a Lucid yet. So one of the first ones. I don't know how you can say that. I know you're saying tongue in cheek. I get it. Yeah, Tesla looking like it's about to go green here, folks. I guess the good juju. Folks, I finished all my oranges. I cut like 3 oranges and I got 1 slice left. All right. 1 slice till we go green. Hey, Mark, thank you for the $20 super chat. Thanks for everything you do for the community. I appreciate that very much. On that note, I'm going to eat this orange slice and hopefully we go green.
Thanks for everything you do for the community.
Man, I'm turning this channel to ASMR with all my audio. You guys want me to come close? Turn up my gain? Turn this into an ASMR video? Brendan, how's it going? Finally caught you live, my guy. Appreciate you tuning in. Yeah, I've been live for like, 2 hours now? I'm going to be live for another hour until earnings call and then another hour for it. Folks, I'm putting in a lot of time behind the screen. My doctor probably wouldn't be very happy to hear it, but I got to cut down screen time, like, to be honest. After, like, obviously, being a YouTuber, it's like, it's like an athlete saying that, oh, I'm hitting the gym again. It's like, yeah, of course, you're a freaking athlete. So the problem I have is I hate having, honestly, I hate being in front of the screen all the time, but there's no other way to do it. And the reason why, I'm not trying to complain for no reason. The reason why it sucks being behind the screen isn't because I'm staring at a screen. It's because I have these new production lights that just stare at me and my eyes just get strained. It's just, it's bad. Thank you, Bobby. Time flies by when you're having fun. Yes, exactly. You guys are hilarious. Ben says, happiness extends your life more than any reduced screen time. Hey, that's a good point, Ben. That's a very good point. I've said this before. I'll say it again. We have some downtime here, but a little bit to go into our earnings call, which, yes, I'll be live streaming. This channel started through just me already spending so much time. Like, I'm sure a lot of you guys can relate to this. You're already spending too much time on Twitter, on Tesla Twitter. You're already spending too much time watching Tesla stock. You're already spending too much time debating your friends and family who now hate you about talking Tesla. And you need an outlet. And this was what the channel, that's how the channel was born, was at the end of the day, and this was around S&P inclusion time. If you guys remember, if you guys were there around S&P inclusion live stream, was, you guys are saying yes. If you guys remember around S&P inclusion live stream, it was like so much fun. It was like everyone was watching Tesla, even the casuals were there. It was just so much fun. And at the end of the day, it was just like, I got to make this channel to share my passion, because at the end of the day, that's what life's about. And I think us, 800 people here tuning in, sharing our passion of, let's say, Tesla or stock watching or options market, or looking at what sort of news is going to come out, what's going to happen with the earnings call. That's what makes life's good. That's what makes life good. Can't even talk anymore with 2 hours into the stream. So I appreciate you guys tuning in. That's my motivation. Do I have FSD beta on my Tesla? No, I do not. And in fact, I can't even get FSD subscription in Canada. So, no. They don't hate me. They just put up with me. Lunaris says, that's when I found your channel. Awesome. So you've been around for a while. You guys are hilarious in the chat. Paco says, I was there. Imran says, I've never seen a male do ASMR. Careful what you ask for, Imran. Be careful. Oh, by the way, I'm not sure if I told you guys. I'm not sure if I told you guys. So for interviews, I have yet to reach out to. I'm gonna be having on Emmett Peppers again on the channel coming up. I don't know. Let's just say in the next couple of weeks, I have to message him to schedule something in. But we said sometimes at post earnings. So next couple of weeks there. Look forward to that. I've got to shoot him a message. And then I'm hoping to have on, if you didn't catch it, I said it on the last live stream, I'm looking to have on Tesla Economist. I'm sure you guys are familiar with this channel. Him on. And to my knowledge, I don't think he's done any interviews. I could be wrong about that. I don't think he's done any interviews to come on. So having him on would be very cool. He's putting out some really good content. So go check him out as well. He's very prolific. And who else? Let me know in the chat. Okay. I have you guys tuning in. You guys are part of the Juju Gang family. Let me know in the comments or on Twitter if you want to tag them. Because like I said, I'm hashtag no clout. Okay. Yashu is hashtag no clout. No clout whatsoever in Tesla sphere. So if you ever want to tag me in with that person that you feel like I should have on the channel, if I have no clout, let me know. I'd love to know. Yeah, shoot the economist. Saraja, yeah, not financial advice. Yeah, I've had Saraja the prophet on. We've kind of said that we'd reconnect at some point. Maybe it makes sense post $1 trillion is kind of what I've thought. Post $1 trillion market cap. Yeah, so Dave, I'm on Dave's tweet here. Dave was pretty close, hey, to estimates. Pretty much nailed it, I think. So good for you, Dave. Nice work. Who else? FJ said I should have him on. Same with Theta. Chicken. Yeah. Ken from Chicken Genius. Paul Lee says Dave is my brother. Very interesting. You guys are jokes. Let's see here. Warren Redlick. I don't think I've ever reached out to Warren. Do you guys think Warren Redlick would be, if you guys think Warren Redlick would be a good guest on the show, obviously very well known in the Tesla sphere. Bigger channel, obviously. That might be a good partnership. Brian says he met Warren. There we go. Actually, funny timing. He's on my timeline. By the way, we did get some news. I don't know if I mentioned this, but the Prime Minister of India has come in and requested. This is an old video, so don't fall for it. Has requested that Elon meet with them. If you guys don't know the news with this, my dad's been sending me a lot of, like ethnic parents, Asian parents. What they do is they go on WhatsApp and they just forward videos. Okay, that's their form of love. Some parents will cook you dinner, pat you on the back, give you a little, shoulder massage. Indian parents send you WhatsApp videos. Okay, they forward you WhatsApp videos. It'll be a good morning video with like a sun coming up with a smile with some like classical music in the back, or it'll be like a happy birthday post. But my dad, in this case, actually forwarded me this WhatsApp video of a very high up minister in India, talking about Elon and Tesla and saying, and what he was saying in this case, he was talking in Hindi. He was saying, they want Tesla to come. They want Tesla to produce cheap cars there, but they do not want Tesla to import any vehicles into their country, and especially like from China. Like that's just off the table. They do not want Chinese imported vehicles in their country. They want a local industry there. I think India and China. I think talking about Powerwall right there, and they have that. I think that's a bigger deal, and I think energy is a way bigger deal in India than audio, than vehicle production might be. Mine did the same. Raptor 6 up with Facebook. I'm Russian and this happens is so true. Raptor said I should do a behind the scenes system setup video. Yeah, I wish I could. Man, if you saw the studio the way it is right now, you'd think I'm a pig if you didn't already. Yeah, Lunar says energy and solar are going to be huge for Tesla in India because we can't have another China for our climate. Well, remember, China does a lot. China does get a bad rep, but remember, without China, we wouldn't have the majority of the manufacturing in the world. It's just crazy. By the way, follow me on Twitter if you want. At Hey It's Yashu. Link in the description. Or the handle is right here. Let's just tweet something massively. Let's just tweet something here. Massive gross margin X credits at, what was it, 28.8%? Operating margin at 14.6%. Unreal. I'm just going to verify that I'm right with those numbers. I'm not really good with remembering stuff, but I did okay here. 28.8 and 14.6, correct. Let's check this out. Let's pull off Chrome. Pardon me here. Let's leave on Chrome. Pub Google. Remember, Tesla's flat. Boil Down says, hey, I tweeted at you. Too many notifications to go through here. Mentions, maybe. I don't see it right now, but take a look at it. CNBC is just talking about Fed GDP estimate, so really nothing to look at there. Let's take a look. Hey, there we go. Got some shout out to you guys for following. LPT Not Nice, Dennis, Mike, Paul, Nasir. Oops, I keep on playing the intro. Sorry. What's the Polestar's name? Steve, I don't know if that's a joke. Sachin says Chicken Genius would be a great guest here. I think so too. I think I quite like Ken's vibe. He's very chill. Not too exuberant. Very systematic and rational with his approach. Very unlike me, right? Yeah. Sorry if I'm not in the best mood today. The Canucks lost yesterday again. The Canucks are just. If anyone watches hockey, let me know in the chat. But the Canucks are more disappointing than automotive than legacy auto at this point. It's just it's abysmal the way that we're starting the season. It's nuts. Not as bad as the Habs, okay, but man, the Canucks are just are a breed of its own. CG3 says, do you think a 3-day rule will affect before stock rockets? Hey, it's really looking like that right now. If we look at Tesla sitting here after hours, Tesla's down about $7. Tesla's probably going to sell off post tomorrow, right? Barring what happens on earnings call. There is an off chance, and this is why we watch earnings call, not only to get insight, but also look at the Q&A during earnings call. And remember, during earnings call, anything can happen. But barring if it's just going to be the status quo, I think it's fairly. I am fairly confident in myself to say that I predict, and this is my prediction, that tomorrow's Wednesday, tomorrow's Thursday, and then Friday. I think Thursday, Friday we chill out, nothing really happens, and if we see a move, maybe Monday we see the move. It's just hard to look at. It's hard to look at the price action today, or to look at the fundamentals in the earnings report today, and go Tesla is declining. Like it's just so hard to look at the earnings report and make some sort of narrative around that. If you have one, let me know. Kraken, Michael, that's right. You're a Seattle folk. Michael, you're right. They're missing Hughes. He is key. He is, but man, if the Canucks are like a bad game of Jenga. All we need is like one piece missing and the whole thing comes down. Jonathan says, at least you're not a longtime Leafs fan. Jonathan, if you are, I feel bad for you. First of all, I hate the Leafs. Always will hate the Leafs. But guess what? I actually watch the Leafs quite often. They're an entertaining team to watch. I've got Matthews. I've got Marner. I've got Morgan Riley. I've got a lot of Leafs people in my pool. And I'm just updating my app to see if the Leafs play today because I love watching the Leafs play, mostly to see them lose. When they lose, I love tuning into Leafs radio and just hearing them how sad they are. Omar says, I'm a Habs fan, man. Oh, Omar. R.I.P. Sorry about that. Oh, Ducks fan. Oh, can we get an F in the chat for the Ducks fan? I'm sorry about that. Yeah, Michael says the Leafs documentary is really, really awesome. Actually, I had a really good time watching that documentary. I found it really interesting. Money Eagle would be a great guest too, Steven. I'm not familiar with Money Eagle. I'm gonna have to do some digging on who that is, but I appreciate the suggestion. And remember, I'm hashtag no clout. Okay, if there's anyone big that you'd like to have on the channel, you bet your bottom dollar your boy Yash will need your help on Twitter because I have hashtag no clout. Has there been any surprise announcement during Tesla earnings call, says David. David, how's it going? I don't remember any. I think the only one, well, this wasn't a surprise. It was obviously Giga Austin being announced over Tulsa. I don't know. That's a good question. Let me know in the chat if you guys remember any. Marco says, interview tips, Tesla economist, and/or Doug de Munro, and/or Dylan Loomis. Dylan Loomis is from Electrified, I'm pretty sure. Sandy Munro, that might be a good guess as well. So Doug Munro is an American YouTuber. Oh, okay. He does car reviews. Okay, very cool. Wild fan. Oof. Okay. I mean, you guys got Kiprasov or whatever his name is. Kaprizov. I just said Kiprasov. Live streaming Juju Gang's heart rate during earnings call would be great. Hey, I've got my Apple Watch. I wonder if I can like API my heart rate into it. To be honest, you'd be surprised. Like my heart rate's pretty consistently probably like 80 or 90 because I'm a fat, unhealthy person. But it'd just be steady. Like I don't know what they would talk about in the earnings call that would get me very stoked. We'll see. What are you guys' predictions? Do you guys think there's anything massive to be announced in the earnings call? Hey, Michael makes a great point. Why not go straight to the source with Rob at Tesla Daily? That's a good point. And I guess there's two Michaels here. Michael Kahn says this. That's a good point. I'd love to. I've never reached out to Rob. I just feel like he wouldn't want to come on, considering I'm like 1/10 of the size of his channel. I just feel like it'd be a failed endeavor. Let's see here. Marco posting funny memes here on our Discord. By the way, if you guys want to join the Juju Gang community and join us on Discord, which by the way, I'll show you guys Discord here while we wait for the earnings call. Let's just see here. Discord is, by the way, if you don't know what Discord is, which, no problem if you don't. I didn't know what Discord was for a long time. If you're a boomer like I was and you didn't know what Discord was, Discord's essentially where the Juju Gang community get together. We talk about stocks, Tesla, obviously, a majority of one. We have 2 Tesla channels in here. In fact, there's some debate going around about Sandy Munro raging about Nishta again. There is Tesla News, where we curate a lot of tweets and news articles. Crypto, NFT stuff as well. I think there's over 200 people in here now. If you want to join the Juju Gang community in there, remember, only prerequisite is you only bring your good juju when you're coming in. Patreon link helps support the channel and gets you access to Discord. And remember, because it's paid, because you have to pay, I think, like $5 per month minimum to get in, you don't have spam, which I'm a part of a lot of servers, as you probably saw there. And a lot of the free ones are just spam and people posting about random crypto stuff or shilling things. Like it's only supporters of the Juju Gang, so we keep it clean. Vaughn says, so Canadian to not try Rob. He seems nice. Almost Canadian, being from Wisconsin. Yeah, Rob does give off Canadian vibes a little bit. I will say I can tell when someone's Canadian, and I'll say Rob is close. But I know, if I just listened to Rob or I watched one of his videos cold, I would know he's not Canadian, probably. You can just tell. You have that Canadian dar. I don't know what else to say. Philip says, love the show. Thank you. Appreciate you tuning in, Philip. Phil says, pinch point with getting Model 3s up and running. The call where Elon said that he was practically living in the factory. Yeah, that could be a surprise for sure. I just don't know. Like, maybe Elon comes out and says, hey, look, we've got enough 4680s in Austin ready to go, and we're going to start making Model Ys with 4680s starting in November and delivering them for Q4 guaranteed, or something like that. We could get something like that. Steve says, I need to get some shades. That's a very good idea, Steve. I'd look like an idiot, though, eating oranges with my sunglasses on here in the studio. Tesla's sitting here at 866. Your boy Yashu is going crazy. Talking for... How many hours have I been talking for now? 2 and a bit hours here. I've been live. Hit the like if you're appreciating the content. A lot goes into me continuing to talk. Rob's from Minnesota, someone's saying. I think Rob is from Wisconsin. Oh, Milwaukee, right? Yeah. 631 likes. Minnesota. Thank you guys. Appreciate that. Okay, so 866 on Tesla. Folks, we're flat. We're flat for all intents and purposes. I don't think we can say that we're down. We're flat on Tesla. Let's pull up Sandy Munro's video, though, shall we? On Nishta. Let's pull it up here. Let's pull it up. Let's see if we can't enjoy some Sandy Munro content.
Do you want to grow your YouTube channel?
Oh, God. I don't have premium on this account. 1 sec. Skip. Let's see.
Hey, boys and girls. I'm back. And I'm not happy. I'm going to read something off from Missy Cummings. This is an exceedingly alarmist view of overprivileged, narcissistic...
By the way, I'm just going to speed this up to 1.5 speed.
...and insecure white men who need to assure themselves that they're part of something greater good, and they're here to save us from the folly that they've created.
By the way, go like, subscribe to Munro Live already. I'm sure you guys already have, but go support his channel.
The only killer robot out there is Elon Musk, Tesla.
Sure.
You know, I don't understand how things happen, but they do. And we have a new sheriff in town, and she is the hired gun for the Luddites of mediocrity. They're going to be marching under the standard of Save the Children, which is the standard way that all politicians try and get every fool under the sun to say, oh yeah, that must be right. The real statement behind, in this case, Think of the Children, is going to be no US OEM left behind. How puerile can you get? If we just hold Tesla back, GM, Ford, and all the others, Toyota, whatever, they'll be able to catch up. You know what? Most people that watch this watch football as well. How many times does any coach tell his team to, well, don't let the guy who's the best quarterback throw. Let's put in the water boy or something. That isn't the way it works. And I'm not a fan of political checker players, especially when our real problem is China. You think for a second that China's going to be holding back on ADAS? Are we going to give that away as well? I mean, really, how many innovators have we got out there in all the auto companies? The politicians have dropped the ball on every worldly event. There's no question in my mind. So let's drive the smart company out of business. We'll keep the American people from seeing what's really going on in DC. They are dropping the ball on everything, and this is just another subterfuge to try and disassociate Americans from being united. Let's talk about how China is beating our government like a rented mule. Do you know China has almost all of the battery manufacturing? That's battery cells. Now, when you hear the news, you hear, oh, GM has got a new battery plant. Ford is going to get a battery plant, blah, blah. You know what? There are no cells made here. You can have a battery pack with nothing in it, but you can't have the cells because they're not made here. Why? Well, that was because they've all been shipped offshore to China. We don't want to be in that messy kind of business. If we continue down the path that we've been going on, there'll be nothing left. For instance, take a look at your appliances at home. None of them are made here. They're almost all made in China. I know because I spent 3 months a year in China from 2015 to 2020, ramping up plant after plant sent to China by Harvard MBAs. And by the way, you probably already know, DC's loaded with Harvard MBAs. Most of the people that are elected officials are Harvard MBAs. Or
by the way, there's nothing wrong with MBAs.
Harvard lawyers, even worse.
Generally speaking.
China just sent a hypersonic missile around the world. It missed its target by a mere 200 miles. That's ponderous. We have nothing that goes that fast, and we have no way of shooting a missile like that down. And what do we get instead? Let's pick on somebody else as a subterfuge. You got no chips? Oh, there's no chips to build cars here. Why is that? Well, that's because China makes them, and China's not giving them out. China wants Taiwan. Oh yeah. All you gotta do is pick up the cover of this magazine, Week magazine, and there's what's happening. But do the American people know about it? No. They hear about, oh, these disastrous events that are happening with Tesla. Tesla's the only car company with anything as advanced as full self-driving. And DC's going to stop that?
Sandy's
Let's
going
look
in.
at the data that can be pulled from the NHTSA website.
NHTSA.
Let's start with vehicle deaths. From
By the way, I know better. I call it NHTSA.
16 to present, 195,400 people have died in the US only. Let's take that same data and see what Tesla's done. Tesla death, same years, 2016 to present. But globally, that means around the world. That means the US, Canada, Mexico, South America, France, Germany, England, China, yes, and Japan, and everybody else included. Guess how many, boys and girls? 209. 209 versus 195,000. You know what that is in a percentage? That's 0.001%. 0.001%. And NHTSA is investigating Tesla? NHTSA has a long backlog of safety regulations not implemented. Let's start with the 30 million vehicles that were produced by 12 OEMs that still have unsafe airbags. How come they're not working on that? How come they're not working about the rear seat unbuckled system? If you have somebody sitting in the rear seat and they're not buckled up, they're running at risk. But you don't know because in the two front seats, yes, a little light comes on. And it tells you whether or not somebody's got their seatbelt buckled. But who sits in the back seat? Who sits in your back seat? Is it grandma? Is it the kids? Are they the let's think of the children kind of folks? How come there's nothing like that? By the way, how many people die in collisions that are sitting in the rear seat? 800. Let's go back to that other number that I just said. How many was it that Tesla had? I mean, really? 800 people die every year because there's no... By the way, there's one thing that you should know. I don't own a Tesla, but the company does. And if you don't buckle up in the back seat, a little bell starts ringing, and I see it on my instrument panel. How come Tesla is doing something that was...
I only think that happens in the front seat, passenger side. The bell, that is. Could be wrong.
Supposed to be done by everybody, and they're the only ones that I know of that are doing it. How about the 2014 missed deadline on the child care seats? That's led to a Congressional Oversight Committee investigation since 2014. Where's the think of the children there? Huh? How about this? A little known fact about something called hide in the herd. Now, if you're not in the auto industry, or if you're not a stock market analyst, hide in the herd means probably nothing. But
Sandy's very upset, and we're going to finish this rant here in a second. I'm just going to pull up CNBC, though, because they're talking about Tesla. I don't want to miss it.
I have to tip the hat in terms of this being a low vol stock suddenly. It speaks to at least where they've removed a lot of the uncertainties around the business, and the valuation is not something that's necessarily, I know growth stocks get punished when they don't grow, but you can't say Tesla's not growing here. So yes, very impressive. I will say that, even if you annualize this $1.83 number and, third quarter profitability, fantastic. The pushback is valuation, but if you get $8 a share annualized in 2021, and you take that out to 2025, and you say $40 a share, which is obviously 5 times, this is still a stock trading almost 30 times, and so that's the issue here. It's not the execution. It'll be very interesting to hear Elon talk a little bit about margins, because a company that's been so successful, being more vertically integrated than some of their competitors on chips and other parts of the supply chain, is still spending money. I heard Elon say at his investor day, they've been spending a lot of money in flying parts around the world, et cetera, et cetera. It implies they can be more profitable in the future. You know how I feel about the valuation, so I can't jump on the bandwagon here. But these are good numbers.
Come on, get on the bandwagon.
Steve, what do you think about valuation? I mean, do you think this is the kind of stock that you have to just sort of hold your nose? I mean, it's clearly, at least right now, the market leader in EVs.
Wow, what a hot
I don't know
take.
if GM or Ford has that runway to the number of cars that Tesla is currently selling, the rate at which they're selling them.
Indeed. Let's see.
Yeah, I think you do have to hold your nose. This is one that I actually missed. I wanted to buy this after that split announcement last summer, and the stock ran up. So to Tim's point, you have there's a bunch of levers they can pull. And quite frankly, the fact that they can make a car more efficient than the standard car makers is leading the pack in the tailwind. Having said that,
EVs.
You have energy storage, you have batteries, so you have services, you have the full self-drive that's coming on. They're way ahead of the pack there as well. I think GM is the closest to them on full self-drive. But once again, if you look at the chart, it looks perfect. There could be a double top issue around the 900 level, but this is something where he can pull that lever again on another stock split. I wouldn't put it beyond him. He can say it's about energy storage. Oh, and yeah, he could talk about another coin that he wants to get behind.
What?
So there's tremendous amount of levers that the other car companies don't have.
That doesn't make any sense.
So yes, I think at a certain point, you got to hold your nose and just buy it.
Oh, okay. I agree with your conclusion,
did this print, did this quarter confirm or affirm Tesla's run that we've seen over the past few months?
Let's see.
Well, it's interesting, and I'm sure Pete's been taking a look at this. The options market was only applying about a $35 move tomorrow in either direction on an $865 stock. That is like minuscule. That stock normally could move that intraday, you know what I mean, without any news like that. So the run up 55% from the May lows. You just talked about the stock being up about 15% in the last month alone. I mean, it really reminds me of that run into Netflix's print last night when we were talking about it. It's like, what were they going to do to get this stock going higher? And we already had deliveries, that sort of thing. The margin news is great. Listen, again, The stock's at 865. It has an $865 billion market cap that's greater than, I don't know, 50, 60% of the global market cap of autos, okay, right there, and they have less than 5% market share. So if you tell me that you're not worried about that other competition who actually knows how to make cars, maybe not as profitable on the scale in which they're doing it right now, as far as Tesla with a 28.8 gross margin, I just kind of say to myself, this is just like the most unhinged thing I've ever seen. I'm not railing against it. I don't own it. I'm not short it. And I'm not that dumb. You know what I mean? But it doesn't make a whole heck of a lot of sense that anything that you see in this print is going to make you run out.
Look at them laughing. They love the bears.
Dan
they love
always
Tesla
delivers
bears.
memorable lines, and I think the memorable line out of that little monologue was unhinged. Pete, do you think that this is the most unhinged thing out there, as he calls it?
Oh, great. Let's hear.
You know what? It's always been that same stock, though, Mel, right? I mean, the idea is that he delivers, and they delivered on the deliveries. They've also delivered on the margins. They continue to be the leader in the EV space. They've got over 60% of the market share there. So
can these guys get a microphone, for God's sake?
Focus on. And there are the negatives, of course. You look at valuation, you can't even look at that valuation. It's crazy. But the reality is they just continue to get data. They continue to deliver. And I think the fact that Elon Musk has so many different ways that he can pull levers, I think that gives him a very, very leading position that he can hold on to that lead and continue to move to the upside. And it's not just about the cars themselves. It's about energy and production of energy and all of the things that go into what Tesla really has become over all these years. It's an impressive move. And I think when you look at this today, I think the interesting part is there were a lot of option buyers over the last week or two. And Dan was talking about some of the movement expected. I can tell you this, they were buying the 850 strike calls last week. Huge numbers, Mel, and they were rolling those up from already great numbers that they'd already delivered. So this is one of these where I think you do have to close, you know what, you got to plug your nose, you got to look at this and use the options. I think that's the real key here, because when you look at that stock, yes, the price is unbelievable, but with the options, it gives you that risk reward where you know exactly how much you have on the table to risk and what type of reward you can get. So the options market continues to be the way you want to play this stock.
Tim?
Okay, interesting.
Can
this guy get a mic,
and
though,
Dan,
please?
Our options mavens a question about Tesla, because historically this has been such a volatile stock, and Pete, you're recommending options. Is this as good of a time, not only in terms of where the stock trades, but has implied vol gone down enough in this that actually really makes options in Tesla for the first time more attractive than they've ever been?
Okay, let's see what he has to say.
I think so.
The guy with no mic again.
I'll let Dan respond as well. But when I look at Tim, you're 100% right. When I look at the implied volatilities, what it once was, where it used to be in the couple 100% type of implied volatility versus where it is now, that has come in immensely. Also, I think that a lot of people who get more and more sophisticated here, you can make spreads. You can have $20 and $30 and $50 spreads where you're able to get in there and still position yourself for the upside or the downside. Either direction, wherever you want to go with Tesla, whatever your gut is telling you as far as the direction. My gut tells me the direction continues to be higher, and I'd rather be in the calls rather than the puts.
Okay.
Only there were a show about using options. Oh, there is on
There
Fridays.
is. It's called Hit That Bid. Mute.
Free and Fast Money friend Gene Munster, partner at Loop. Gene, great to see you.
Gene Stir's on.
I know that you're a bull. I know you love this quarter, except for maybe the solar and energy line of the puzzle. But in terms of margin, this is what really grabbed me in your Twitter feed, and that is that you would expect Tesla to have margins the size of Apple's in just a few years. What does a roadmap look like to get there?
So there are three pieces. The first is just better efficiencies related to Giga Austin and Giga Berlin. These are new factories from the ground up. This is something that traditional auto is not doing. They're retrofitting existing factories. New factories means better alignment, productivity, and margin impact. Second is FSD. This is a little bit elusive. It's a topic in of itself. But eventually FSD, I think whether or not they get to full self-driving, they're going to have enough there where they can charge more for it, and that is software revenue. And the third piece is around batteries and the components. And as those continue to decline, what Tesla is doing around batteries is a half or full or 3 steps ahead of the rest of the battery industry. And I think that those three combined get you to that 40%. And I want to bring that point back to a theme, and the theme is to hold the nose when it comes to Tesla valuation. if you subscribe that this growth can continue, and that is quite impressive, 73% delivery growth versus the big auto in September down 23%.
That's massive.
Something is going on
massive.
there. If you believe that this growth can continue, you can see a company that goes from, call it, 70 billion in revenue next year to 400 billion. And I'm going to get to the point. My point here around profitability is that if they do in fact inch these margins higher, gross margins up to 40%, let's say in the next 3 years, they're going to get an Apple-like multiple that is 6 times revenue, and that would equate to about a $2,500 stock. Now, 5 years out, a lot can happen between now and then, but there was much more to this quarter than meets the eye, and I think the substance of what the revenue growth and the profitability trend is, I think this is still a great opportunity to own Tesla for the long term.
We were just talking to Adam Jonas of Morgan Stanley yesterday, Gene, and he was saying that the market, he thought, underestimates the manufacturing piece of this puzzle, which you highlighted as well. The fact that Tesla can build factories from the ground up and use new technologies like a gigapress, for instance, to really reap efficiencies like making the chassis out of one single piece. How much of this is, how much of this is far away? How much of this is within the near future? Because I would imagine that this is an important piece of the puzzle when it comes to getting a $25,000 vehicle onto the market.
Ooh, sophisticated question.
Exactly. You have to, a big part is this manufacturing. Answer your question is, how far is it away? It's a few months away from initial production in Austin and Berlin, and probably a year and a half away from really hitting scale production. And so we're, this isn't going to happen overnight. The margins aren't going to jump. You're not going to have those efficiencies overnight. But if you have the luxury of investing, I would consider that owning something for more than a year. I think you're just going to continue to see those manufacturing efficiencies find their way into the gross margin.
What's the number one question you'd ask Elon Musk if he were on this call?
Ooh.
I want him to know how realistic is he to have full FSD that is general availability. That's one that you can trust. There's a lot that goes into that, but when he believes that, they are, it's really noteworthy that they are keep pushing forward in these betas, and there must be something there. There must be some concept of a timeline. Because once that happens, I think there's a huge turn in terms of how investors even more optimistically think about the multiple on Tesla.
All right, Gene, I'm going to let you get ready for that call. Gene Munster of Loop Ventures, the call again underway in just about 15 minutes time. We'll see if Elon Musk makes an appearance on that one. Pete, what's your number one question for Elon Musk if he were there?
Oh, no mic guy.
Quite honestly, it sounds crazy, but I actually would, and I think Tim was the one who brought this up, talking about Bitcoin and some of the other different types of places that he might try to have investment part pieces of this company, because we already know enough, I think, about what the direction is, what the company's doing, and what the direction is in terms of which type of vehicles he wants to sell. Obviously not the low end, he wants the higher end, and he wants those margins, but I'd be curious about what his thoughts are going forward in terms of some of those investment ideas as well.
We've got an earnings alert meantime on IBM. We're tracking those shares lower in the after hours. The company's call is underway. Let's get to Deirdre Bosa, who's back with the details. Hey, Debo.
Hey, Melissa. We'll see you, Arvind Krishna. Open.
Yeah, don't worry. I know it's Pete Naranjan. Been watching him for years. He's got to get a mic though. You guys are saying Paul's saying he's in a mausoleum preparing the slots for Ford, GM, and Toyota. Okay, some good insight for a second into, and I'm going to turn off CNBC there for a second. Some interesting insight, right? So everyone is saying, not everyone. Okay, the vast majority of CNBC there was actually saying, hey, call side Tesla is where I'd like to be. Tesla's looking strong. Like, it's hard for them to find downside bias, but if you look at what they say on the downside, they go, listen, Tesla's performing amazingly, but I still don't believe in their valuation. That's what they're talking about. And the key differentiation, the reason why I've pulled up Apple here, is they talk about Apple and how Apple's gross profit, Apple's gross margin and their operating margin is where Tesla really wants to be at long haul to get this valuation, right? Like, that's the goal. So if I pull up Apple here, and you'll see their margins, Apple's, and this is last quarter, their margins were 43% gross margin, 43%. Tesla's just hit 30, right? Including zero emission vehicle credits. And their operating margin, Apple's operating margin is 30%, 29 point something. 29 point something. It's just, and that's why if you talk about Tesla, people put Apple and Tesla together in the future and they go, is Tesla really going to be an auto company? Because if you look at, for example, we were looking at Ford, right? We were looking at Ford, and yes, Apple numbers are nuts, right? Like we know that. That's why Apple is such an awesome company. But if you look at something like Ford, and I go down to their margins, Ford's 2020 fiscal year gross margin was 11% gross margin. Their operating margin, I have to scroll down past my fat head to even get to, was minus 3.4%. Ford's operating margin in fiscal year 2020 was minus 3.5%. Now you're going, okay, Yash, what about GM? Okay, great question. Let's pull up GM. I actually don't know. GM, off the top of my head, annually, GM's gross margin is 20%. Their operating margin is only 5.4%. This is for fiscal year 2020, right? Fiscal year 2020. And so when you talk about valuation, stock market's all about valuation over the long haul. And you pull up Tesla. Let's pull up Tesla now, shall we? Does Tesla really fall into the automotive valuation section? I guess they produce cars, but that's probably the only thing similar that they have with legacy. And just at a financial level, right? Tesla's gross margin last fiscal year was 21%. Their operating margin for the first time was positive at 6% already operating margin. That was last fiscal year. This quarter, or not this quarter, quarter two, because I don't think Hypercharts is updated for this yet. They already updated it. Awesome. Is 26.6%. This doesn't look right. I'm just gonna pull up quarter three report just to make sure. Operating gross margin, or just make sure here. So gross margin, including ZEV credits, was 30.5%. Tesla's already above 30. And I saw a question here in the comments saying, what's Tesla gonna do once they continue to ramp up margin? Are they going to invest something back or whatever? Here's my guess. When Tesla, and it's showing that Tesla is getting a lot of free cash flow now. When Tesla gets extra cash, I think what they're going to do is, first of all, I think they're going to lower the cost of their vehicle. I think they're going to lower the cost of vehicle. Elon has said on past earnings calls, he doesn't care for maximizing net profits. He doesn't care. He'd rather take that alpha and put it behind lowering the cost of the vehicle. The problem with that theory right now is, if Tesla does that and they lower the cost of vehicle, economics 101, if demand's through the roof, supply's low, we have to increase price to satisfy, to do marginal demand to marginal supply. The problem is right now, with the supply shortages going on, they have to increase the price because they have too much demand already. And what I think that's happening as well, let me know in the comments if you guys are from the States, I think people are front running a lot of the EV rebate news that is about to come, right? You know that likely an $8,000 EV rebate is about to come, and you look at the wait list for a Tesla Model 3 and you go, if I put in an order now, I'm not getting it until April or May anyways. Screw it. Let's put it in the order. By then, hopefully we have the rebates and I can actually, and it doesn't cost me anything. I think it's $100 or something like that. Put it in. And so the longer the timeline goes, It's kind of a self-fulfilling prophecy in that sense. And no, the earnings call is coming up in 8 minutes. I'm going to have it pulled up here. So it's $250, no refund. Thank you. $250, no refund. So, oh man, this is just what I think. Let me know what you guys' thoughts are about this. In the Money says, not lowering average selling price, reinvest, pay off debts early, get extremely good credit rating. And credit rating, actually, good topic to bring up. The credit rating upgrade, we should be getting towards the end of this year into the beginning of next year, right? And I'm just going to pull up Tesla IR website, pull up the webcast as well. Let me just hide all my info. One sec. And Tesla credit upgrades should be coming. Now, is that going to make a big difference into Tesla? I don't know. I think maybe. I'm very bullish overall about credit upgrades affecting stock price. I can see a world in quarter one, boom, credit upgrades happen, And then all of a sudden, a whole new investor pool comes out for Tesla that couldn't invest in Tesla, even though they look at the financials and they go, that's crazy. I think we're about to see a once in a lifetime story here in so many different facets. And I actually tweeted something about this recently. Let me just pull this up. I said, major technological disruption is almost always met with fierce opposition. This is the problem, but equally the opportunity at hand. Meaning, yes, they don't get it. In our eyes, in Tesla Bull's eyes, mainstream media doesn't get it. Big institutions don't really get it. Yes, they're equal weight for the S&P right now. But that's the opportunity. If you're actually a Tesla Bull and you're thinking, these guys don't get it, my battery just died there. I'm just going to put in a new battery. If you guys really think they don't get it, that's the alpha to be had, right? Let me just put in a new battery, folks. Bear with me. Sorry about that. Okay, battery's back. Even my battery was like, man, we can't stand any more video of Yash. By the way, hit the like, hit the subscribe if you're enjoying the content. We've been live for approaching 3 hours now. My mom always said I love talking, and clearly I've been talking for like 3 hours. I'm like dying right now, but almost there, folks. Almost there to earnings call. I promise. We're almost there. Thank you, Digital. And okay, so Tesla has this. Okay, Tesla got their little like rave music on. I'm not gonna put it up yet, but it's coming up. Michael says, when's the 24-hour live stream going to happen? Oh, would you guys actually watch that? If I did a 24-hour Tesla live stream, it had to be for like, you know, Giga Austin coming online, or like a big event that I'd have to live stream for. Like S&P inclusion, that would have been like a perfect event for me to do a 24-hour live stream. You need a Juju coffee brand. That's a good, in the money. You always got solid ideas for me. I appreciate you coming in and always giving me good ideas. So far, all I have is the Hit That Bid sweater with the Juju on the back. So if you want your Juju, if you want to go rep, Hit That Bid, link is in the description. In fact, here, hold on. I can actually, never actually tried this. Let me try to, I think I can pin something here. Let's see here. Thanks for subscribing, y'all, by the way. Okay, let me pin this merch item. Never done this. All right, check it out if you want. There it is. Here's what it looks like, by the way. I'm low-key thinking I need to cop a pink one. I have a white. I'm not a clean person. Just overall, you know, I'm a messy guy. My Juju gets all over my shirt. I hate bleaching my clothes. And on the back, you got the Juju. But with popular request, by the way, I have received many requests for a sweater with only the Juju on it. So whatever that orange emoji that you see on the back, only that in the front, more of a low-key style. Trust me, I've taken your advice. Those are in the works. And by the way, so comment on Sandy Munro's video. Thanks for subscribing, y'all. Comment on Sandy Munro's video just to tie the knot on this. Sandy Munro's going in on Nishta and or Nitsa, and he's going in because of the new senior advisor being appointed, who's very anti-Tesla, very anti-Elon, anti-FSD. And one point I love about Sandy is that he's saying you would think the US government would be the ones propelling their software forward, propelling technological disruption forward. But it's really the Chinese government that is adopting this like so much more massively than the US government. And sometimes in economic theory, you know, we've learned about this. If you don't know, I have a degree in economics. Not that makes me any more smarter about economics. Trust me. If you ask 3 economics professors about a question, you're going to get 4 answers. But at the end of the day, you kind of see this with regimes or countries that have surpassed kind of their growth stage, and now they're kind of maintaining, still at the head. But then what happens is kind of complacency into industry, where all of a sudden now you start seeing not really the decision to be made about what's best for the industry auto, full self-driving, whatever, but really what serves to protect the old industry. And I talk about that a lot with the icebox industry. The icebox industry, right? If you don't know, before fridges, there was ice boxes, and everyone would have them in their front yards. Again, I don't know this from experience. Obviously, I learned this from class and university. But one really big opposition, and by the way, thanks for joining, Bradley. Thank you for joining the YouTube membership. One really big opposition to the icebox or to refrigeration was the icebox industry, because there'd be like your paper guys, they'd be coming to your front yard. You know, they'd be refilling your ice for you. You know, you'd keep all your meats and cheeses in there. And then as the refrigeration came out, all of a sudden, all the icebox industry started revolting against it. And you saw a lot of countries in South America actually ban refrigeration on this. So, you know, I'm not saying this is what's happening. I'm not saying that's what we're going down, but remember, history almost always repeats itself in some way, shape, form. That's why we, I guess, try to, read about history. So, let me see here. Ooh, so many juju tweets today. Appreciate you guys sending me the good juju. The juju gifts. Love it. Okay, 2:30. Okay, 2:30. What I'm gonna do is do you guys want me to have the stock up as well on Webull on the side? So maybe I'll do this. Let me know if this is okay. I'll put in Webull into the chat. Yeah, you guys would want the stock price, right? Like the chart? Okay, yes, that'd be cool. So what I'll do is I'll put an arrow as to when we started or when the conference call starts. Oh, there's still music playing. Last time, did I tell you guys I got copyrighted on the first ever earnings call report that we did? So I'll put an arrow as to when we've started. We don't need ice in Canada. Yeah, honestly. So as soon as we start, I'll draw a line, and then we can see how the action has been post-call and pre-call. Okay, thanks, folks. Great. This is what makes this channel so awesome, is all you guys tuning in, almost 1,000 of you guys here tuning in for the earnings call. Without you, this channel isn't possible. By the way, also, there also is this. I'm not sure what to make of this. This is a bingo card made by Snowball Capital on earnings report, and shout out to you, David, for tweeting this at me. It's kind of like Tesla earnings bingo. If Tesla says LFP or timeline, this is bingo. If you don't know what bingo works, you need 5 in a row. It's going to be too hard for me to have this up, but shout out to, and it's one drink per space, but shout out for tagging me in this. Appreciate that. Okay, got the disco music still on. Edward says, is this channel dedicated solely to Tesla? Edward, I reserve the right to talk about other stocks, but I'll be frank, 99.9% of the content about my interest is around Tesla. So that's what we've done. That's what I do is 99% about Tesla. I mean, yes, macro markets are a part of it as well, and we'll talk about that and options pricing around that sort of stuff. But yeah, if you like Tesla, that's who would want to subscribe to this channel. So In the Money's making fun of me about NVIDIA. Listen, it's pronounced NVIDIA. It's pronounced PayPal. You can't convince me otherwise. You know, it's kind of like a speech impediment that I have, okay? Brendan's saying 1% Bitcoin. By the way, I already said this. Man, Bitcoin's on a tear. 66,000 still. Leaving Cardano in the dust. I've kind of divested a little bit off of Bitcoin, more into Cardano. You guys know that I've been buying CNFTs. Ethereum is so strong, sitting at 4.1K. Shout out to all the OG crypto holders. Webcast started. Okay, thank you. We're going live.
Q3. Overall, we delivered just over 240,000 cars, 20% higher than last quarter and 70% higher than the same quarter last year. We were also able to achieve an annualized production run rate of over 1 million cars towards the end of the quarter. The increase in production rate has primarily been driven by further ramping of the Model Y at our Shanghai factory. Additionally, we have made great progress increasing production volumes of Model S and have recently started the ramp and deliveries of Model X. It will take a bit more time to get this program back to prior volumes, but based on demand, we are targeting to exceed historical production levels. We have also completed the transition of our Shanghai factory as our main export hub. This has enabled us to supply more vehicles to the North America market and to introduce Model Y to Europe. Due to part shortages and logistics variability, we have not been able to run our factories at full capacity. It's important to note that while we have roughly doubled deliveries year to date, this has been exceptionally difficult to achieve. I want to thank our supply chain team for their incredible work and our production teams for showing impressive flexibility as we make adjustments real time. This team's expertise in the chip industry across all tiers has made a huge difference when managing through these challenges. Additionally, we never reduced our production forecast with our suppliers as we're adding capacity as quickly as possible. I also want to thank our suppliers for their dedication and partnership to Tesla. Despite these increases in production and generally higher prices, our backlogs are continuing to grow and average customer wait times are extending. The only practical way to address this in the immediate term is to do everything we can to build more cars on our existing production lines, which is where we are focused. Similar dynamics are also playing out in our storage business, as we are working to expand Powerwall and Megapack production as quickly as parts and cells allow us to do so. Additionally, we have made good progress on the in-house battery manufacturing program, and we're excited to have expanded the full self-driving beta program to more customers. Financially, our auto gross margins reached 30.5% on a GAAP basis, and just under 29% excluding regulatory credits, which is our strongest yet. This benefit primarily comes from higher volumes, particularly out of the Shanghai factory, increased mix of the Model Y, and we have made good progress increasing Model S volumes. Model S has now returned to positive gross margin, and we expect this to increase with higher production and the ramp of Model X. As was the case in Q2, there was some net benefit from pricing actions. However, this remains small in the context of other contributors. Please keep in mind that given backlog, it will take time for the impact of recent changes to flow through our financials. Note that we are also not yet recognizing additional revenue from the FSD beta program.
Wow.
Supply chain challenges, including expedites, continue to provide cost headwinds, as was also the case with FX this quarter. While we are seeing an impact from the rise in commodity and labor costs, we have also been adjusting pricing, which should help to compensate. Overall, as I mentioned in our last call, our P&L continues to benefit from the marginal profitability of each incremental unit with higher fixed cost absorption. As a result of the great progress on margins, volume, and appropriate management of overhead costs, we were able to achieve an operating margin of just under 15%, exceeding the long-term guidance we've laid out previously. On cash, we generated record operating cash flows of $3.1 billion and continue to invest heavily in the build-out of manufacturing, supercharging, and service capacity. We also continue to retire high-interest rate debt, including the early settlement of our 2025 senior notes of $1.8 billion during the quarter. As we look forward, we are clearly quite a bit ahead of the pacing required to achieve our target annual growth rate of 50% this year. Q4 production will depend heavily on availability of parts, but we are driving for continued growth. We are also nearing assembly of our first production cars in Austin and Berlin. It's important to stress, while the first production car is an important milestone, the hardest work lies ahead in the ramp. Please keep in mind that we are pushing the boundaries on new product and manufacturing technologies at these factories, which makes it difficult to predict the exact pace of the ramp. These factories will also partially weigh on our margins as we work towards volume production. Overall, I'm very proud of what the team has accomplished, and I'm excited for our next phase of growth into Q4 and into 2022. The team has done a tremendous job improving our financial health in a short period of time, while also continuing to improve our precision and pace of execution. Thank you.
Thank you very much. And we will now take questions from institutional and retail shareholders that we posted on our website.
That was really fast.
The first question is, when should we expect the first vehicles to be delivered with 4680 cells?
Yeah, thanks, Martin. Early next year, from a non-cell perspective, structural battery crash, range, and reliability testing are on track to be complete this quarter. Testing to date has gone well, and the Fremont manufacturing line is on track to support. However, similar to what Zach said before, this is a new architecture and unknown unknowns may exist still. Our top priority is ensuring quality in what we deliver. And from a cell perspective, we are comfortable with the design maturity and manufacturing readiness matching the pack timeline I just mentioned.
Thank you very much. The second question from institutional investor comes, do you still expect to start production of the $25,000 model in 2023? What are the biggest hurdles from now until then?
Thanks, Martin. Yeah, we're working on a strategy to increase our production rates as quickly as possible. I think Zach spoke to that well. And we're doing this while trying to add the least amount of incremental complexity to the business. We don't want to add any new vehicles to our lineup when we're generally in a cell-constrained world, while there is still more runway to grow these existing products. We are focused on Model Y expansion in Austin, Berlin, ramping S and X further in Fremont to restore to past levels, while also growing 3 and Y production in Fremont and Shanghai. As we've mentioned before, after Model Y in Austin, our next product launch will be Cybertruck, and that timing, of course, depends on increasing cell capacity both from our suppliers and through our in-house cell, as well as many other headwinds we face in the supply chain, and completing our currently full plate of products on the table.
Thank you very much. The third question is, with FSD beta training data sets set to explode exponentially as software is released to a wider and wider audience, are there any early takeaways with regards to how quickly versions can iterate and be pushed out from bi-weekly to weekly or even daily?
At this point, it's not so much about how much data can we collect, but how quickly can we process the data we've collected. This is where Dojo comes in, as we mentioned on AI Day. With this substantially faster training computer in Dojo, we will be able to iterate more often than we do now. If, for instance, say the net takes 1 day instead of 1 week, makes a huge difference in our ability to push out more updates. But realistically, there's a whole lot more that comes into play when iterating software updates. The whole infrastructure from top to bottom, including testing and validation, needs to be set up for faster iteration. So daily updates are not really realistic for now.
Thank you very much. The next question is, can you provide an update on future model development and how much diversity in your fleet will be necessary to achieve 20 million in annual volumes? The best-selling cars in the world today only sell slightly over 1 million units. So is it possible to achieve 20 million units with just SX3Y truck and the $25,000 car?
Thanks, Martin. Yeah, as we've mentioned before, we've seen record growth in both Model 3 and Model Y segments, where Model 3 is currently the best-selling luxury sedan worldwide. And as we mentioned at our shareholders meeting, Model Y is poised to be the best-selling vehicle in the world. Tesla continues to break molds in these vehicle segments, and we hope to do so with each new product. As we've said publicly, we will eventually expand the vehicle lineup to get to larger volumes, and we believe that we will need to be in all major segments across small, mid-size, large sedans, SUVs, and trucks to do so, along with, of course, the massive space of robo-taxi.
Thank you very much. The next question, a question from retail shareholder is, what is Tesla's goal for vehicle production capacity for the 4 current factories, Fremont, Shanghai, Austin, and Berlin, by 2024?
Yeah, thanks, Martin. Our goal as a company here is to grow on an average pace of 50% per year. And so you can extrapolate that out. There may be some periods of time in which we're well ahead of that. There could be some periods of time, despite best efforts, where we're slightly lower than that. But that remains the long-term goal of the company. In Fremont, we're continuing to push the boundaries of what's possible there. Over the last 12 months, we've done about 430,000 cars of production. And, based upon everything that we know in the factory, where the bottlenecks are, what the potential is, we're targeting to increase that another 50%. I think that will be a difficult goal, but that's the goal that the internal team has, and they're going to continue to push on that. As we look towards Shanghai, we're continuing to push the boundaries there, and we continue to ramp production there as well. So most recently, the ramp of the Model Y, which was our biggest contributor of volume in Q3, we'll continue to ramp that factory. And and our plans there with time are to keep growing the capacity in that factory. Austin and Berlin are interesting factories because our first iterations of capacity there are on Model Y, but we've intentionally set these factories in locations in which they have a quite significant amount of land and ability to expand. And so, we'll take Model Y at these factories. We're trying to get to 5,000 cars a week as soon as we can, and then we'll continue to push beyond that, potentially even getting to 10,000 cars per week at those factories. And then we'll add Cybertruck here in Austin and continue to grow from there. So, our goal is to get to millions of cars per year over the next couple of years, and then ultimately in the long term, be able to achieve 20 million cars per year. We're going to grow as quickly as is feasibly possible with an eye towards a 50% annual growth rate.
Great, thank you very much. The next question is, what is your view on the tightening regulatory environment for FSD in the investigation and broad data request by NHTSA? Some of the recent nominees to NHTSA have been publicly critical of FSD, including engaging with short sellers online. How will you manage this environment?
Great question.
Thanks, Martin. Yeah, as we have been for years, we always engage with NHTSA and other worldwide regulatory bodies to share our knowledge and to work with them on our approaches on both active and passive safety. There are ongoing regulatory inquiries taking place all the time, and especially on the subjects like FSD that are at the cutting edge of technology development. During these investigations, my team, myself, are always cooperative as much as possible. We expect and embrace the scrutiny of these products and know that the truth about their performance and the innovations our products have will ultimately be all that matters. In the end, and as I've said on previous calls, we take safety as a top priority in all our designs. This is because our primary motivation is coming from a team of incredible engineers designing software and hardware that saves lives and prevents injuries. In doing so, we'll continue to be transparent to the public on how our technology is both developing from an autopilot safety data, the latest of which we just shared in the shareholder update. And you can also see and review a wide variety of customer post FSD videos on social media.
Right. Yeah, just to add to that, I mean, as Lars said, safety is extremely important for Tesla. It's the right thing to do. And if you look at various independent testing and regulatory testing of our products, you can see the work of the incredibly talented engineers and the results of those tests. And our goal in developing safety-oriented software around the car is to continue to go beyond what the hardware is able to provide. If you can prevent a crash from happening, that's the safest way to manage this. And I think at a macro level here, what we're seeing, and this is entirely understandable and expected, is that the automotive industry is going through a transition from the traditional car as we know it to more of a computer software-oriented sensor suites around them that can manage things beyond just what the driver manages. And regulatory bodies are understandably so, are interested in understanding how to regulate in this environment. And NHTSA is no exception to that. So as Lars mentioned here, I think this is a great thing. We're excited to partner, and we'll work collaboratively with all regulatory bodies who want to go on the journey to the transition to a software-oriented vehicle.
Thank you very much. The next question is, service remains an issue with appointments available weeks or even months out. Likewise, supercharger wait times have become untenable at some locations. What concrete steps is Tesla taking to improve the customer experience in these two key areas?
Yeah, I'll take the service part of this question. Drew, you can take the supercharging part. We have seen an increase in service wait times throughout the summer. And there's a couple of things that have contributed to that based upon the information that we have. The first is that, and I think this is kind of this is not unique to us, is that the return to some sense of normalcy in a post-pandemic world has happened, I think, more quickly than most people expected. And what we're seeing here is that the number of miles that people are driving has increased. There may have been some demand for service during 2020 or in the early parts of 2021 that customers put off. And so there's a bit of a catch-up that's occurring that has increased demand for service. At the same time, in the macro environment here, logistics, moving parts, sourcing parts has become increasingly more difficult, which is a well-known issue in the world right now, as well as challenges in the labor market. And so there's kind of this simultaneous increase in demand for service where the ability to supply that service has been impacted for the reasons I mentioned. And so, we saw an uptick primarily in Europe and North America in service wait times over the course of the summer. And we've been working extremely hard since then to address this. And we've seen our wait times come down. So this is not the case in every location, but if you think about it from regional average perspectives, we are seeing improvements there. We remain super focused on adding locations. And so over the last year, we've grown our physical footprint of service centers by 35%. We've grown our footprint of mobile repair by over 40%. We're also adding staffing as quickly as we can in the areas that are most impacted by the imbalance of supply and demand for service. But I think the most important part about all of this is, and we've said this on calls before, where the best service is no service. And so we have been incredibly focused as a company, both on the initial quality of our vehicles and reliability of our vehicles. And we've seen pretty substantial improvements in both of those metrics over the long term and over the last couple of quarters. So it is something that remains on our minds. We monitor this very closely, but hopefully that's a helpful explanation into the context and what we're doing.
Yeah, and on the supercharger side, the supercharging team monitors congestion and plans expansion to ensure customer experience with minimal wait times alongside the growth in our vehicle fleet. While we certainly have work to do in expanding capacity in some congested areas, average congestion on the network has decreased over the past 18 months. Nonetheless, we're not standing still. We are executing accelerating expansion plans globally. The network has doubled in the last 18 months, and we're planning to triple it over the next 2 years. And even so, on an individual site basis, to combat existing congestion more quickly where it is isolated and problematic, we expedite local relief sites, deploy mobile superchargers, and we try to introduce pricing strategies that encourage more off-peak usage to avoid the waiting.
Thank you very much.
And just one thing to add on supercharging. If you haven't experienced our latest iteration of battery packs that can handle fast charge rates in combination with our 250 kilowatt charging stations, is pretty incredible. And this is a really important component to supercharging capacity, because the faster you can charge, the more charge sessions that you can have on an individual post, the better the customer experience is as you're going on a long-term journey, because your supercharging times are lower.
Yeah.
So this is a really important part of the strategy. Supercharging team has done a great job rolling these out. But it requires a combination of both the 250 kilowatt charging and our latest iteration of battery packs.
And we've also maintained an ongoing roadmap on software improvements, dynamic routing to avoid busy superchargers. That's actually really helpful. We take the real-time busyness of the stations into account when choosing where to navigate people on their road trip. And beyond that, we're also continuing to improve the trip planner itself and how it estimates how much energy people use, so it's not too conservative and asking people to charge more than they need to, which is another thing that can delay a total trip.
Great, thank you very much. The next question is Tesla considering any other ideas other than FSD with real-world AI that can bring additional software revenue to Tesla? If not, can Tesla consider building interesting games around FSD beta?
Sure. At AI Day, we did talk about a potential future where Dojo could be used as a neural net training platform for other companies. It's not a focus of ours today, as we're fully subscribed on Dojo with our internal uses. We do expect to continue to improve the in-car experience in the context of FSD.
Great, thank you. And maybe last question from shareholders is, how has FSD take rate changed since the introduction of monthly subscription? Are there any plans to increase the FSD pricing as wider release becomes imminent?
I'll take the second part of the question first. We won't be providing any forward-looking commentary on our pricing strategy or what may happen here over the near term. With respect to the first part of the question, it has been an interesting thing for us to unpack within the company. I mean, what I'll say just as a general statement before I make a couple specific comments is that the things that we learn on FSD subscription today are not necessarily all that relevant. This is really more of a platform for when FSD beta goes into wide release and the features and functionality become more accessible to more customers. The second thing that I'll note is that if you look at the pricing, the monthly pricing of FSD subscription, and then you compare that to the cost of either rolling FSD option into your lease or your loan, on a monthly basis, the most economical way for a customer to enjoy the features of full self-driving is through purchasing it up front and rolling it through their financing. And as a result of that, what we've seen in the data is we're unable to detect a change in the upfront take rate of FSD when people purchase cars. We have seen quite a bit of activity of folks curious to experience what the software has to offer and subscribing to it and enjoying it through that route. But again, as I said at the beginning, I think what we've seen so far on FSD subscription is not terribly relevant. We'll see how that plays out in the future as we continue to release more features.
Thank you very much. And now let's go to analyst questions. I just wanted to remind everyone to click on raise hand button if you want to ask a question. The next question comes from Pierre Ferragu from New Street Research. Pierre, feel free to unmute your mic and go ahead. Pierre, I think your mic is muted.
I'll take over for Pierre real quick.
Okay,
Pierre, can you come out here?
Pierre works on that. Let's go to the next analyst. The next question comes from Joseph Spak from RBC.
Always tech issues with the tech companies, hey?
Joe, we cannot hear you. Can you click unmute?
Tech analysts, man. Tech analysts. Someone give me Tesla's Zoom link. I'm going to zoom right in right now. I'm unmuted.
Okay,
Juju Gang's coming on.
While the team is working on that, let's just go back to say.com questions.
The best Zoom is no Zoom.
So the next say.com question is, can Tesla allow for FSD to be transferred to another vehicle at a fee, something less than 10K? Early adopters are paying the price if they want to upgrade their vehicle. You lose the value on the trade-in, and now you have to buy in at the higher cost.
I don't think that this is widely known, but we're already actually doing the sentiment of what this question is asking. If you trade in your Tesla to Tesla, there's a difference in price that we pay for a trade-in that has FSD compared to one that doesn't. And so there's that premium that we pay to repurchase the FSD. That money can then be applied towards the purchase of a new car. So I just, we hear this feedback quite a bit. We see it on social media, we see it in the forums, et cetera. And so this already does exist. Not directly in the form here, and we don't call it out explicitly in the trade-in, potentially that we have increased the price of your trade-in as a result. And hopefully this clears this up because we do actually do that.
Even I didn't know that.
Okay. And the next question is, Elon said that we get an update on Cybertruck in November a year ago, but it hasn't happened, and we know there are a lot of updates. Will you show off the new and improved Cybertruck?
Yeah, thanks, Martin. You get a lot of questions on Cybertruck. We've been busy detailing the Cybertruck to achieve the prototype version we shared with customers a while back. As you may have seen recently on social media, we built a number of alphas and are currently testing those to further mature the design. And while those point out a few key additions like rear steer, there are also a number of smaller or less visible improvements, though the product is largely true to the initial vision. We'll continue to work through the product in the beta stages that we're in now and look to launch that late next year.
Okay. Thank you very much. We just promoted Pierre to a presenter. Can you hear us?
Oh, there he is.
Can you hear me, guys?
Yes, we can hear you.
Amazing. I'm very impressed that you managed to figure that out.
We are too.
Thank you, Pierre.
I would have panicked if. Anyway, let me ask you my question. I'm very intrigued by what you guys are doing on the insurance front. And so you have now in the market in Texas an insurance product for which the premium varies as a function of the safety score of the driver. And so I'd love to hear you about that. You must have some initial data points about market reaction, what's the uptake. And from there, can you tell us about how you think you're going to distribute that? Is that going to go through your install base very easily, or is it going to be like a heavy marketing push? And then maybe tell us about your expansion plans. What are the next geographies? What's the timing? How fast is that business line likely to grow in the next few years?
Yeah, thank you, Pierre. I'm extremely passionate about our insurance product. We have a terrific team here at Tesla of folks who have been spending a lot of time developing this. They're probably listening to the call, so we're pretty excited so far, Pierre. So, I mean, at the highest level here, we entered the insurance market kind of unintentionally, I would say. Our customers were coming to us complaining that the price of traditional insurance was too high, and it was reducing the affordability of a Tesla. And part of our journey here at Tesla is we want as many people as possible to be able to afford our products. That's extremely important to achieving the mission of the company. And if you look at the price of insurance as a percentage of what somebody's monthly payment is, it's quite high. And we spend extreme amounts of effort in manufacturing to take $5 of BOM cost out here or $10 out somewhere else. If we can get $5, $10, $20, $30 out on a monthly payment, you can calculate what that means in terms of reduction of the price of the car if you finance it. And the leverage of improving insurance cost is huge in terms of affordability. Mm-hmm. And so that's kind of the context by which we stepped into this. As we started to do more research, essentially the tools by which the insurance is traditionally calculated are optimized based upon the existing data, but the existing data is limited. So there's a focus on things like marital status or age or other attributes like that. Accident history is a good one, etc. But what essentially happens here is customers who are low risk and don't actually file many claims end up overpaying on their insurance relative to their cost. That overpayment then goes to riskier customers who are essentially being subsidized. And as we looked at this and we looked at the data, we thought this just doesn't seem like it's fair. At Tesla, because our cars are connected, because they are essentially computers on wheels, there's enormous amounts of data that we have available to us to be able to assess the attributes of a driver who's operating that car and whether those attributes correlate with safety. Because we do get a signal when a car has been in an accident. So we've been spending our time looking at hundreds of different variables and also looking at billions of miles of driving history. And we've been able to fit a model that is able to predict with decent accuracy the probability of collision over a period of time. And the model is not perfect, right? The model is a function of the data that we have available. That data set continues to grow. We continue to experiment with new variables, but we do have a model that works pretty well so far. And from that model, being able to predict frequency of collision, we can then align that against a price curve. And we can have individualized pricing integrated into the car, integrated into the app, integrated into that customer's experience with a feedback loop back to the customer on how they are driving after every drive, the attributes that they were successful on or unsuccessful on, and the tips of things that they can do to improve their safety. So that's what we've developed. We then included the safety score as a part of the FSD beta enrollment program, where we have almost 150,000 cars currently using the safety score, and I believe the latest data is over 100 million miles of driving. So we've been able to go back and analyze that data, and we've learned two things coming from that. The first is that the probability of collision for a customer using a safety score versus not is 30% lower. It's a pretty big difference. It means that the product is working and customers are responding to it. The second thing that we've looked at is what is the probability of collision based upon actual data as a function of a driver's safety score. And that is aligning with our models. Most notably, if you're in the top tier of safety compared to lower tiers, there's multiple X difference in probability of collision based upon actual data. So, this is a very new and very exciting frontier for us. I know that was long-winded, but we spent a lot of time on this and we put a lot of thought into it. Specifically with respect to the rollout, the insurance industry in the US is intensely regulated, and it's regulated on a state-by-state level. That means that we require regulatory approvals from each individual department of insurance at each individual state. Texas is the first state that we launched in. I do want to thank the Texas insurance regulators here. You've been great to work with. We have a roadmap of additional states. We will launch the product in those states as we receive regulatory approvals. And our goal is to be in every major market in which we have cars in. We did a soft launch in Texas, was it last week? Yeah. And what we're seeing in initial take rate data is that if you compare that to what we're seeing in California, we're off to a good start here. So we're very excited about it. We're excited about individual risk-based pricing. We're excited about the ability for folks to become safer and as a result save money. And it feeds into our priority of a company of building the safest products in the world.
Yeah, okay. If I can add to that, it's really exciting for the engineering team to see the finance team and taking on safety into their world too. It's just pervasive. So thanks for that, guys.
Thank you, Lars.
Thank you. Pierre, do you have a follow-up question?
You get that many questions?
No, I think I'm fine, Zach. Thanks for taking the time to answer. It's fascinating and very interesting. Yes, I look forward to looking into that.
Thank you very much. The next question comes from Joseph Spack from RBC.
It was a long answer, hey?
Thanks. Can you hear me?
Yeah, we can hear you.
Perfect. So Zach, as you noted, you hit low teens operating margins. That was your medium-term target. You're there now, despite the number of challenges and not full utilization of some of the plants. So, how are you thinking about that target now? Does it allow you to either drive price down further to unlock more demand, invest in other initiatives, or does that target need to change? And in longer term, do you have an aspirational gross margin target as the mix of software and hardware changes?
Yeah, we've actually exceeded our long-term guidance on our operating margin target. So we're very pleased to see that. And as we look out over the next quarter and the next year, there's a number of puts and takes financially for the company. The launch of Austin and Berlin will have rampant efficiencies there for some period of time until we get those factories up and running. And so that's likely to put some downward pressure on our margins as those factories ramp. Our goals are to ramp those as quickly as possible. But as Drew mentioned earlier, there are a number of unknowns that we'll need to work through. We are kind of also in this uncertain environment with respect to cost structure. So we are seeing costs increase on the commodity side. We're getting feedback from our suppliers as we are seeing ourselves, the impact of labor shortage. And then logistics and expedite costs just continue to be a part of our story here. And it's uncertain how that will unfold. It's our hope that these things stabilize. Exactly when that happens is difficult to predict. And we have been adjusting pricing in line with those changes in cost. And so we'll see how that unfolds over the course of the next year. So it's difficult on gross margin to say where that will go, for those reasons. With respect to operating margin, we've been very focused as a company on managing our overhead expenses and operating expenses. And operating expenses as a percentage of revenue has been declining, and I expect that trend to continue to happen. And I think the net of all of this is hopefully that we continue to make progress on operating margin over the next 4 or 5 quarters. As we think kind of forward, the business up until this point has kind of largely been a hardware automotive business with a little bit of software on top of that. As full self-driving matures, as take rates increase, if we are to raise pricing on that, there's considerable upside both on gross margins and operating margin as that comes to light, as the business starts to become more of a mix of a hardware-based company and a software-based company. So, we feel optimistic about the journey, very optimistic about the journey as we look over into the long term. Just a little bit difficult over the next 4 to 5 quarters. We'll continue to update on earnings calls as we learn more information. There's just a lot of uncertainty in the world right now.
Thank you. Joe, do you have a follow-up question?
Yeah, the second question is just, you mentioned LFP packs globally for standard range models. My understanding is that all comes from China. Is that the continued go-forward plan, or do you want to develop LFP capabilities in other factories around the world?
Yeah, certainly our goal is to localize all key, parts of the vehicles on the continent, at least the continent, if not closer to where the vehicles are produced. So that is our goal. We're working with, internally and with our suppliers to accomplish that goal, and not just at the end assembly level, but as far upstream as possible.
Thank you very much. And the next question comes from Colin Langham from Wells Fargo.
Mega Shanes, I need a Tesla energy drink right now, to be honest.
Colin, are you able to unmute?
Come on, Colin. Let's go, Colin. Unmute. The best mute is no mute.
Okay. While we're waiting for that, let's go to the next one.
Do you hear me now?
Sorry, yes, we can hear you now. Perfect.
Sorry about that. Okay. Yeah, just actually kind of following up
on the question before. You'd mentioned commodities are rising, and when I look at a lot of the key raw materials in the battery, cobalt, nickel, lithium, all up 40%. And I know you guys have done a good job of getting long-term contracts to sort of mitigate that impact. I mean, have you seen so far any impact from that spike? And if not, I mean, any sense of when that raw material headwind might actually show up or has shown up?
Yeah, we have seen an impact. Our primary exposure right now is around nickel and aluminum, nickel in the cell, aluminum and non-cell. And, we have a mixture of contracts with various suppliers. Some materials we contract directly and we have full exposure to price fluctuations. We do have a number of long-term commitments, long-term contracts in place. We also have contracts where there's some amount of cost sharing based upon the movement of indexes. And so, as these have been moving, some of those costs have been flowing through to us. It's not a substantial amount of cost, but it's not small. As we look towards the next year, I certainly hope it doesn't play out this way, but it's possible that we continue to see more of cost headwind as a result of these movements. It's difficult to say precisely, but the volatility in the increases are just so substantial. And there are certain suppliers that maybe up to a certain point have been absorbing some of the increase. And as contracts expire there, or we have to renew and extend them, we'll have to return to negotiations. And so, what we have to do as a company and what we're intensely focused on is we need to be continuing to drive down the cost of our products, which we have been doing. And we have to overcome cost increases that are outside of our control. So whether that's resourcing components or redesigning components or finding ways to be more efficient in manufacturing, we have no choice but to continue on that path and be even more aggressive in the light of the macroeconomics here.
And diversification, right? Like, doesn't need to be nickel or cobalt there's always another option.
Thank you. Colin, do you have a follow-up question?
No follow-up questions, folks. Let's keep it moving.
Okay, let's go to the next one. The next question comes from Colin Rush from Oppenheimer.
Oppenheimer, okay, let's hear it.
Hey guys, can you hear me okay?
Yeah, we can hear you.
Perfect. Can you talk a little bit about your strategy around anode materials and your ability to leverage that into reduction on the cathode side and performance from the LFP?
Wow. Engineering question much?
Sure. I don't know that I'm going to get into too many specifics, but I guess first, one thing I would say is unlike the commodities discussion we just had, like the anode materials are not really in the same situation, just in terms of what their constituent components are. So there's less of a focus on like rapidly changing them one way or the other because they're generally stable commodities. There isn't exactly like a tit for tat where like get a better anode, use less cathode. Like there's a fundamental ratio that you need to maintain for the cell to function. So I guess zooming out, the primary focus on the anode side that we have is just ensuring that it doesn't in any way, that we are able to continue to reduce the cost of the anode without impeding on the long-term cyclability of the product. It can also help with energy density, as you like sort of improve the energy density of the anode, you improve the energy density of the cell, not directly one-to-one, because you have to pack more cathode in as the anode gets better. And that's a focus as well, but the trade space is just sort of cycling versus day one cost.
That's super helpful. And then just around the vehicle pricing strategy, obviously there's a lot of flexibility there for some customers and not. Can you just talk a little bit about the process around vehicle pricing and how quickly you expect to change that and adjust as you see some of these commodity prices flow through the cost structure and you look at the demand dynamics for vehicles?
Yeah, pricing has been a really difficult thing for us over the last couple of quarters, and where part of the challenge is, well, I mean, the great thing that we're seeing in the space right now is there appears to just be quite a profound awakening of the desirability for electric vehicles. And I mean, to be totally frank, it's caught us a little bit off guard. And that kind of awakening and change in consumer sentiment, I'm sure there's lots of reasons that go into it, but folks want to buy an electric car and folks want to buy a Tesla right now. It's very exciting for us. At the same time, we have installed capacity to build more cars, but we're constrained by a number of dynamics, as we've talked about in great detail. And we are putting in extreme effort to build as many cars as we possibly can. It's hard to overstate how extreme the efforts are. It's quite the grind. We're trying as hard as we can to maximize that capacity and to be able to meet the demand that we're receiving. But the net of all of this is that we're not able to increase production capacity fast enough. So at the same time, we are seeing macroeconomic cost impacts on our structure, as we've discussed previously on the call. So we're trying to think through, if somebody orders a car now, it could be delivered in some cases, depending upon the car and which factory, could be a couple of months, could be a couple of quarters. And the timing in which we build that car will be just before that car gets delivered. And what will the world look like at that point? And so we're trying to think through how the cost structure is evolving. How does pricing need to change with that? What are the supply dynamics in the space? The other thing that I'll just note on pricing is that companies change pricing all the time. The difference is that when Tesla changes pricing, it's extremely transparent, where that's not always the case otherwise. And sometimes our pricing will increase, sometimes our pricing will reduce. Sometimes to the public, our pricing changes may not seem to make logical sense. But there is a strategy that we work behind the scenes as we're balancing supply and demand, as we're also trying to balance various shortages on parts, as we're trying to manage wait times. All of that goes into the optimization here.
Okay, thank you very much. The next question is from Brian Johnson from Barclays. And Brian, please go ahead and you can unmute.
Let's go, Brian. Let's make this one good, man. I'm hanging in. Thanks for tuning in, folks.
Tesla team?
Yeah, we can hear you.
Yeah, no, it's by the way, great to hear there's a team at Tesla, not just a one-person show. I want to drill down a bit more on FSD. In December of 2020, in a Business Insider interview in Germany, your leader said that he expected level 5 autonomy by December within a year, so that would be now. Yet, we look at the progress in FSD and some of the issues you see on YouTube, and it looks very much like a level 2+ system that requires vigilance, as in fact your disclaimers say. So I guess 3 questions. Kind of one, what is the timetable to get to level 4, at least capability? We can deal with the regulatory stuff later. 2, what is the criteria for Zach for you to release deferred revenue around FSD, and is having a level 2 system that needs monitoring enough to release that deferred revenue? And then 3, maybe you could talk a little bit more about how you plan to work with the new, with the folks at NHTSA who appear to be, asking some questions. They have 3 requests out to you regarding information around the level 2, around the capabilities of FSD.
This guy better not get a follow-up. He just asked 3 questions, man.
Yeah, so I guess we'll take them in order. It's difficult to be specific on the timelines. The Autopilot team is working extremely hard, iterating on every version. We are being extremely transparent through the release of this to public customers who are posting information online. So, when you're using full self-driving and you're going through the iterations, you can feel the progress. And for those who don't have it in their cars, social media is excellent at getting a sense for how that's progressing. And the team is moving quickly with every iteration, with every update, and they're working very hard on that. On your second question about the criteria to release deferred revenue, the way that this works is, we have made certain commitments as to what this product can offer at the time that a customer has purchased that. And so what we have to assess is, have we met those commitments, and is the software widely available to the folks that we've made those commitments to within a certain geography. And given that FSD is still currently in the beta phase, it's invitation only and it's limited, we have not deemed that to be appropriate for recognition of deferred revenue. And we'll continue to evolve this. We'll continue to monitor it within the finance team to see when we get to the milestones in which we're comfortable releasing.
Okay, so
on the NHTSA question, Lars, do you want to take that?
Sure. I mean, as I said earlier, we always cooperate fully with NHTSA and other regulatory bodies in any sort of investigation they may have, particularly related to ADAS systems. When they came out with the standing general order in July, we were quick to respond to that, and one of the first and only companies capable of actually meeting the needs of that report. We continue to send that information to them as required, weekly, and as incidents occur. And with the additional investigations, as I said, we meet that with great sincerity, and we'll work through them one by one to make sure that all the facts come out, and that NHTSA is well informed about our strategies for both active safety in this case, but also passive safety. As you guys may know, we released updates to our airbag and restraint system last week to Model Y using our fleet data. We worked closely with NHTSA on that, and they were fully in the loop before we did it. So I think these kinds of things will continue to happen in the new regulatory space that Zach discussed as we move towards a software-based vehicle, and we're happy to be a part of that journey.
Thank you very much. And the next question comes from Trip Chowdhury.
Hey, Trip, the boy Trip.
Thank you. Very good quarter. I had two quick questions. First is regarding the two upcoming factories in Berlin and Austin. How are the two factories different from each other? Maybe in the layout, design, assembly lines. And the second question is related to Cybertruck. How is the supply looking at if you look at the exoskeleton steel, is the supply for that material sufficient for immediate ramp up, say in 23, 24 time for Cybertruck? That's all for me.
Yeah, sure. So obviously, as we've noted in the past, we developed our own stainless steel grade for the exterior Cybertruck to meet both the durability and corrosion requirements required for an automotive world. With this raw material and others, as Drew mentioned, we continue to look at multiple sources. We have made some early sourcing decisions in that, but I think we'll keep that one internal, and we've already began the first cast ingots of that. Rolling stainless isn't so different from rolling any other material. It's just about how hard the rollers are to get to that hardness level. And, just like every manufacturing process we put in for every new vehicle, we'll work with our suppliers and vendors to make sure those timelines and supply meet the need and demand of our customers.
And on the differences between Austin and Berlin, there are some. They're largely associated with the different sort of building architectural choices that were, happen to occur in collaboration with like local codes and other sort of governing requirements that drive the differences in the architecture between the locations. In general, though, like we're trying to progress the manufacturing system as a system and make sort of logical, like path-defined improvements from factory to factory. And in some cases, there was an improvement identified between like decisions for one Austin, the other Berlin, or vice versa. And so there might be a slightly newer iteration of one part of the factory in one place than the other, but it's all part of a path forward in the factory that builds the machine that builds the machine. Sorry.
Thank you very much. And the last question comes from Jed Dorsheimer from Canaccord.
Hey, can you hear me?
Yes, we can hear you.
Hey, thanks for taking my question. So, so Brandenburg, I'm just wondering, Zach, if you could estimate the carry cost from a margin perspective, or I guess in two parts. So, when do you expect? Do you still expect production coming on in 21? So, a couple months left in December, and how do you see that margin impact as a function of the carry cost? And I do have a follow-up.
Sure. So it remains our target in both Austin and Berlin to be able to build our first production cars before the end of the year. We've talked about this a bit, the unknown unknowns, new factories, new vehicle designs, new technologies, new locations, new teams. So, there's quite an execution journey ahead of us. But that remains our target, and all of our plans are oriented around that. We should not expect for us to deliver cars by the end of 2021 from these factories, even if we do produce some. So homologation, regulatory reasons, and we'll want to make sure that we build up some number of cars that we're confident in the quality and the customer experience around them. The second thing that I'll say, and I mentioned this in my opening remarks, is because of the newness here, it's extremely difficult for us to be precise in what the ramp will look like. And it's possible the stars align and things move quickly. It's possible that we're spending the bulk of next year working on ramping these factories. It's just very hard to say, and we'll continue to update you all through these calls and through other forums. As to how that then impacts our margins, that is also difficult because that is a function of the ramp, which is uncertain. So the benefit here, which is different in the ramp of these factories compared to other factories, is if you think about the percentage of our total cost structure in any given quarter that is associated with new ramps, we have the Fremont factory that's running, generating stable and growing margins there. The same is also true in Shanghai. So I expect we'll see some amount of headwind on margin from these ramps. It's just entirely dependent on how quickly we're able to ramp and what uncertainties come up during the process.
Sure. So on a margin per car, but I would suspect though, if your carry cost is full right now that as you start producing vehicles, it's going to be a margin lifter from where you're at right now. No?
I mean, we are carrying some amount of cost associated with the factories today. And so the incremental cost associated with turning the factories, it's not 100% of a factory, if that's what you're getting at in your question.
Yes. Yep, that's what I was getting at.
Yeah, we also actually saw a very similar dynamic to this when we were launching Model S earlier in the year. So, when a product starts launching, and then cost of goods sold starts to activate, depreciation starts to activate. There's a bit of a movement in the P&L as to where that cost resides. So yes, to some extent, Brandenburg and Austin costs are already flowing through our P&L, but we still need to continue staffing and ramping and incurring all the operating costs associated with the factory that we're not spending right now.
Fantastic. Thank you very much, everyone, for all your questions. And we'll see you again in 3 months. Thank you very much and goodbye.
All right, folks. Turn off the techno music. Folks, we did it. 4 hours later, call is done. The most interesting point of all, I think, came at the end there where Zach said, even though we might produce cars out of Berlin and Austin, don't expect us to deliver any by the end of this year. And I think if you look at Tesla price action, it's dipping a little bit since then. Remember, we're only down 1% after hours. typical Tesla post after hours trading. For all intents and purposes, Tesla killed it this quarter. Amazing, amazing quarter. No two ways to put it. Now, remember 3-day rule. Tomorrow's Thursday, then we got Friday, then we got the weekend. Monday or Tuesday of next week probably is looking likely for the actual move to be put in. So let's see how it goes. If Tesla dips tomorrow 3, 4, 5%, I'm buying more. Amazing earnings report for all, pretty much any way that you slice it. I want to thank everyone here in the money and all the mods, Marco, Sanju, everyone tuning in, and that made this 4-hour live stream happen. As you can tell, I'm lacking some juju right now. I finished that way too early, and I woke up way too early to be live streaming for 4 hours. But we got through it. We managed. Hopefully, you stuck through here as long as you did. And yeah, much love for tuning in, guys. I'd be lying if I said I wasn't tired. I'm pretty tired right now, but I have an appointment to head to. So I don't want to be too late for that. Much love, guys. Thanks for all the super chats. Thanks for all the new members on the channel. If you want to join, I'd be remiss if I didn't remind you. You can join. You can help support the channel. Get Discord access with an awesome amount of people in here that I see in the chat through Patreon. $5 per month help support the channel, but you also get Discord access there. Much love, everyone. Take care. I'll catch you. When will I catch you? It's Wednesday. Friday Power Hour live stream. Of course, we can't miss it. No video out tonight. I don't think I could talk for another 10 minutes, to be honest, to make another video. So video out tomorrow, Power Hour on Friday. Let's see how Tesla price action goes. Amazing quarter nonetheless. I can't take a nap. I gotta sleep early enough to wake up early again tomorrow morning. All right, guys, I love you guys. Thanks for tuning in. Thanks for making the channel happen. Can't say enough. Sounds cliche, but it's true. All right, guys, take care. Peace.